Guys, in the description and the pinned comment, PayPal, Cash App, Patreon, Locals, Buy Me a Coffee. A ton of you guys are donating $1 or $5 a month, and it's growing slowly. And I hope within a year it can match or outdo YouTube and Rumble and Spotify. The importance being so I'm not beholden to them. If you want something in return, Sport Drink in the description. Tommy's Podcast for 10% off. Heaven's Harvest Prepper Food, big old buckets. Tommy's Podcast for 10% off. And the Heaven's Harvest MREs, 50% off only with my code Tommy TOMMY 50. Also in the description. A ton of you guys are buying the MREs. That's funding the show. Please keep going if you can. Also in the description, ARC, the Association for the Recovery of Children. Special Forces guys don't take salaries. Rescue sex trafficked kids. They've been doing it once a month since 1993 with a 100% success rate. Go help them too. Thank you so much. One. And we are recording on Monday, June 1st, 2026 at 12:24 p.m. Eastern Time with Mr. Matt Dines and Mr. Tom Luongo. And to answer what you just said, no, I have no idea what I'm talking about. I don't have any idea what I'm doing in general in life, but that also includes the podcast. Was it fucking who's the just a fucking comedian? I used to do drugs. I still do, but I used to do. I don't know what I'm doing on the podcast. I also don't know what I'm doing in life, but I also don't know what I'm doing on the podcast. But
it's the classic line from Carrie Fisher in Postcards from the Edge, where she said, "I was in the why she was in the drugs and alcohol." So it's because I was in the brain expansion and pain reduction, and what I wound up with was pain expansion to mind reduction. So nothing makes sense now, and everything hurts.
That's life, yeah.
That's pretty much the where we are. Like I've been living my life by that since it's a hilarious that book, by the way. That book is hilarious. She was an amazing writer.
Well, it's kind of one of those. I was going to say, is that Mitch Hedberg?
Mitch Hedberg. I was searching.
Was that it? I don't know. It might be. But
yeah.
It's just a no setup to the joke, just payload all in one sentence.
I have a frozen banana. I want a banana later. So I'll keep it frozen now.
Well, to get us on topic, it's kind of like that line, famous, I don't even know about a famous bank robber, but they asked him, why do you rob banks? His answer is, that's where the money is.
Yeah, that's where the money is. Or even better was this weekend or late last week when Scott Bessent was asked about, God, who was he talking about? Oh, it was about Gavin Newsom putting the 100% tax on the J6 remuneration fund. And he said, you can't fix stupid, or there's no cure for stupid, which is echoing the old Ron White line. You can't fix stupid. I'm like, this is just the best timeline ever. So when the Treasury Secretary is making fun of the governor of California using an old line from a drunk Texan comedian who's got a scotch in one hand and his dick in the other, like, okay, we're doing this right. Like, this is the world we should be living in.
Well, I think that's going to be an interest. I haven't focused too much on that remuneration fund,
right?
But when you're looking at political infights, specifically here, we got the overseeing power of the federal government, that authority, and then a state pushing against that at the 100% tax. That's rebellion through the financial channel.
It's also illegal, and they're just going to immediately shut down in the court. So it doesn't really freaking matter. So Gavin Newsom is just playing games. But what else is new?
What's a judge? I mean, at the end of the day, it's going to come. What does a judge rule on it? And I think. pick your circuit, and right. They'll get the ruling they want.
They get the ruling they want, and then they'll go up to the Supreme Court, and Judge Alito will be like, "Okay, no, no," or whoever's in charge of the Ninth Circuit, because it'll happen in the Ninth Circuit. You know how that works. So, but yeah, it's just ridiculous. So I don't know. I mean, so I haven't even. I mean, it's been one of those mornings where I haven't even looked at the capital markets. I didn't even see anything all that interesting this morning. I saw that gold was down $75 and bond yields were up a little bit and currencies moved a little bit, but nothing really interesting since the last time we chatted. It's just everything's just kind of been in stasis, and I sort of just working my way through it, going, well, if we're in stasis now, we're definitely kind of in the sell in May and come after Labor Day kind of churn while we wait for the political situations to the political logjams to work themselves out. That's really what I was, the last 4 or 5 days. That's what I've been seeing. But especially since they failed to, unbalance the dollar markets for the previous 2 weeks. The stuff we talked about the last time we were on the podcast.
That's all just been kind of swept over,
Mhm.
and we'll open up that door sometime in the future, whether
Yeah,
it's
yeah,
Q2 quarter in this month if we're evolving towards it, or it's kicked the can down
yeah,
further on. But right now, today it's just another same headline we've been saying. It's like, oh, the Iran deal is off. What's the reason this time? Oh,
yeah. Well, it's
all right. We're
tomorrow.
just tugging back and forth.
Yeah, that's really all we're doing. And what they're going to do is they're going to set up a stupid. On Monday, nothing's happening or it's off, and then on Tuesday, Trump's going to say something, and then they're going to like lather, rinse, repeat the stupid taco trade, and then there'll be this, and like like at the beginning of the administration, I said one day I just looked up and I went, oh, clearly what's going on here is on Thursday and Friday, Trump decides to put out his talking points as to what he wants them to talk about over the weekend. So they get together on Emily's list on Saturday. They organize what they're going to say. They go on the Sunday talk shows. They give you the talking points. They give the marching orders to all of the social media bots. Bloomberg and the Wall Street Journal and the Financial Times and the markets are set up for Sunday night to come into Monday morning. Here's our story that we're going to ramp up, and then that goes on until Monday, until Tuesday. Trump turns around and goes, nope, sorry, head fake. And then we move on to the next thing. They get screwed for 2 days. He's in charge of the cycle for Tuesday and Wednesday where we fight. And on Thursday, he moves 90 degrees into a different direction. And we lather, rinse, repeat. We just keep doing this. He's been in charge of the operational tempo of the weekly news cycle since the beginning of this administration. They only really got a hold of him during the whole Epstein files thing back in August through November of last year. He lost some operational tempo, but then he immediately got it right back when he went after Maduro, and they've been on their back foot ever since. So that's like 2026 to me. So
yeah, so the things are the tempo is escalating as well. I think from my standpoint, financial markets, all of that. But
right.
I think that the event coming up on everybody's radar, like this SpaceX IPO, I know like generally we don't
Wow, yeah.
talk about that thing, but it's going to be like, I want to talk about what this means, like why you put that there in the middle of what we talked about last, part one, the dollar transition, right? This is all taking place. Frame this under the backdrop of we've got two competing dollars here. We got the old offshore euro dollar, or you could say the physical embodiment of that would be the Federal Reserve note. We talked about those silver certificates of the 1960s going away. At the same time, you had two competing dollars: silver redeemable dollar, Federal Reserve note dollar, redeemable for nothing. But it was legal tender, could satisfy existing debt, all of that payment on demand. So think about what we're seeing in SpaceX in that transition. Like you got the competing forces, $2 now taking place. That same Federal Reserve note, but also the stablecoin dollar, which is the up and coming thing. Instead of switching from an asset dollar with silver to a liability dollar, the Federal Reserve note and the offshore euro dollar standard, I see it this time around. We're transitioning from the liability dollar back towards an asset dollar. That's a nice little change of hand because the asset dollar, the asset is the Treasury IOU. So it's a piece of debt from that old system. But that is actually, in my mind, that's a feature, not a bug. That's your coupler to convert the old world into the new. All right. So why do I say that? Why do I bring this up? We can get into that later. Put that in a box. When we see this SpaceX IPO, right? One of the things you need to do when, like, all right, we're going from a situation where there's a massive amount of like debt outstanding in the system. There's a trade body, the Institute for International Finance. It's just a trade, lobbying group. They put an estimate. The total amount of dollar debt outstanding is like 350 trillion. Nobody knows what it is. Who knows? But you can go through this two different ways. You can either collapse the bubble onto the asset base, and it's going to be massively deflationary, or you could inflate something else, move the value over there, and then collapse that other thing later. So it's not the money collapsing, it's, some other overpriced assets. And this is where, what Dave Collins says, you look at the big chart, it's like this thing has to correct, but it's like,
Right.
how is it going to? Um, I like to look to history to see, all right, how do we get there? And you see one playbook of how these power brokers design the system to go from A to B. And that can tell you a lot about what to expect, about how you're seeing things play out on the ground in your own life's version of history, where you just have to get some footing somewhere, and then after that, it's just hang on for dear life. Um, but so the SpaceX IPO, what do I view that as? All right, it's this build out of this technology wave that just sucks in like risk capital. Like it's just like, oh, this is going to be so great. We're going to build out all these data centers. You look at the filing for SpaceX IPO, and just one caveat: this is not any financial advice. Do your own homework, all of that. But we're not giving investment recommendations, any of that here. But you look at the pricing here, it's like, wow, that's like 100 to 1 on the valuation. And I think they want it to come in like $2 trillion, something like it's a big number on a revenue base that's maybe cracking double digit billions. Like it's like
Right.
100 to 1 price to sales, and you're like, what is this insanity? And so
Right.
you got to pull in the speculative fervor of like, no, 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 this is going to be huge.
Mhm.
There's a big prize coming. We're going to build data centers for $4 billion and sell the processing for 16, and look at that ROI. So what
Mhm.
you're really getting the public to buy into is this future economic activity that's supposed to come due from, hey, if we throw our capital here, it's all going to be great. And we'll all get rich, all that stuff. All right. It's generally not how it plays out in the long run. You have to go through a step in between.
Yep.
I think history shows every time we do this, whether it's been, the .com, the fiber build out, like Enron, the equity in Enron was that bubble, right? It was, they shifted over from a company in the 1980s that was, doing oil and gas production, trading. They owned pipelines. They shifted into trading future or like paper oil and gas, and then
Right.
they shifted into like, oh, this works so well, it's so profitable. Let's do this for other commodities, and then they came up with internet bandwidth, and this is where you get like, who are those guys? The smartest men in the room.
Right.
That the book that went into it. Jeff Skilling. Who was their CFO, Andrew.
Oh, I
I
know.
forget his name,
Well,
but
yeah, so do I.
yeah, these guys, you think about it, it's like, what did they do? They attracted a bunch of equity capital in, and they drove up this the stock price. And like at the end of the day, the promise was the fiber optic cable. We're going to lay this out for the .com era. And they were negotiating things like they had Blockbuster signed on in this. It never actually went anywhere just because it would take too long to develop. But Blockbuster was actually like signed on with Enron to build out what Netflix is, like that business model of streaming
Mhm.
media. And it collapsed upon itself because actually to go from A to B, it turned out, it's like signing up for a journey you thought was like a short, 1 to 2 year thing. It's like, oh, actually, this was like signing on for the Oregon Trail in Independence, Missouri, and you got to make it all the way to the West Coast. And
And you
you
might make some money at the far end.
Yeah, it's like, well, it turned out you didn't pack enough supplies. You ran out of capital. You ran out like all your food, whatever. You ran out of bullets, and sorry, you died. I don't know if you played that game Oregon Trail in the '90s, but no, that was my
It's
generation.
just
And
the Donner Party of
yeah,
investment capital. Like, you know.
exactly. But then you see the same thing with like the railroad build out. We'll talk about the
Mhm.
greenbacks a little bit more in the Civil War. It was like
Yeah,
all
yeah.
of the late 1800s they were building out. Let's just build railroads everywhere. Once we figured out how to do them, produce the steel, lay the track, all that stuff, we're just like, let's just lay them, like lay the track everywhere. And you saw that bubble, grow and then collapse like throughout the late 1800s. All right, similar thing. We'll talk about SpaceX here. The South Sea Company and the Mississippi Bubble Company. This is how I kind of think about it. So South Sea Company was the United Kingdom's version. It was London's version of an equity bubble scheme designed to fund the government that was broke. The Mississippi Bubble Company was the same thing for France. So what these you call them bankers, geopolitical players, all of that, what they were trying to copy was what the Dutch VOC unlocked. And like the Dutch VOC was a trading company, and it owned the maritime sea lanes. We talked about those last times. The actual business franchise that everybody's fighting over. This is where the spice trade, that the thing from Dune. I haven't read the Dune, but I'm not into that. But I know that Tom, I know you probably have. It's like the spice
Oh, yeah,
must flow. Is that where that comes from? Yeah.
yes, it does.
So the actual like largest equity market cap in history. It's not like Microsoft. It's not Nvidia today. In real purchasing power terms, it's the Dutch VOC, which was all just spice trade connecting Southeast Asia, and their chief commodity they handled as middlemen was literally like cinnamon, cardamom, all these spices, bringing them into Europe. And it turns out, if you've never had that before, like that makes the biggest difference in life than anything. Like actually having some seasoning on bland food. Talk about life improvement. All right. So that thing is like that was worth massive amounts of capital. Like that was the Amsterdam, financial economy, all of that banking system. All right. So you get into the process where we're handing over that control of the trade franchise from the Dutch, and it's like UK and France are now contesting over it, and they need to build a monetary system to fund it. So I guess start with the Mississippi Bubble Company because this one's way easier. It's simple. It only operates on one plane. It was really just selling for the King of France. He imported this banker, John Law. I want to say he was from Scotland. He comes up with this scheme. He's like, we need paper money. What does that mean? It's like everybody's short on specie, bullion, physical metals, gold and silver coinage. So they think, all right, how do we actually kickstart this economic growth and get some expansion of money supply? Well, the answer for Mississippi Bubble Company is like, all right, we've got this territory, like France still like settling North America, right? They started in the north and like Montreal, right? St. Lawrence River, where they still hold an island today, right?
Yeah,
Like,
they do.
and then up through the south into the Louisiana Territory through New Orleans. All right. So they had this Mississippi Territory, and the idea was we're going to turn the Mississippi. I don't know if colony was their term for it. They probably had a special French word, but it was like, we're going to turn this business franchise, this startup into we're going to turn this thing into a cash cow. Mississippi is going to produce all its, staple crops, sugar, all that stuff on, plantation style, farming. And, we'll export it through New Orleans, and this Mississippi company will have the trade rights, like the monopoly, to handle that trade, and then all of that sugar going to the French Empire's consumption centers. Like it'll just earn the tax on that, and this will be the copy paste to the Dutch VOC. So if you saw the Dutch VOC come out in the last 100 years, like just created more wealth, and also like the other thing too, like all right, the European empires, they start with Spain and Portugal, but Spain and Portugal, the actual trade franchise was in private interest, right? It was in the monarchy's hands, the lords. It was in a very tight-knit circle. It was actually Amsterdam with the VOC where they turned it into a joint stock company, and they'd sell shares to the public. So you get all of society just pooled into this thing, right? And so with the Dutch VOC, all the dividends paid out. It's just like it's cash flow and like not your entire economy or your entire population, but like down to the middle class. Like people were like it spread the wealth a lot more so than Spain and Portugal. All right, so Mississippi Bubble Company, South Sea Company, they try to copy paste on what they just saw work with the Dutch VOC. Dutch VOC was slowly falling apart. And anyway, John Law spun up this scheme. He cranked it, way too hot, way too fast. The actual price of this Mississippi Bubble Company shot up, but it didn't actually have any real trade like to backstop it. So the whole scheme collapses, right?
And wasn't John Law the guy who tried to then turn that into let's base our money based on the land itself. And he was the guy who tried to, create a currency based on and a reserve system based on the land, right?
Yeah, that's another approach you've seen.
Right.
They tried this this was the first step to go from the like the Weimar mark to I think they call it the Renton mark, where
Renton
instead
mark,
of
yeah.
just a money printer and just circulating bills exponentially rising to cover the
Right.
gold
Reparations.
reparations. Yeah, thank you.
Hmm.
They're like, well, this is not going to work. What we need is like, we'll backstop this new Renton bank with mortgages on
Hmm.
the industrial, commercial
Hmm.
real estate
Right.
footprint, et cetera. So then you actually have some cash flows to back up the emission of new money, and then that actually turns in that ends the Weimar hyperinflation. So yeah, same thing after John Law's Mississippi Bubble Company fails because public speculation, they got so into it, like it reached its mania very quickly. It peters out within a couple of years. It's a very quick, Roman candle
Collapse.
burning. It's only
Right.
got a few shots, and
Right.
and then they've got to go on to something else because there was no actual business behind it. All right, that's France's case. All right, and in the UK, you had the same thing going on at the same time. There's a Bank of England going on as well, like into this, which is I think where the story gets interesting as well with silver, gold, Newton, Isaac Newton
Hmm.
involved. But
Yep.
you get this South Sea company launched, and what it was supposed to do, it owned the same thing, like the trading rights for the supply and demand of this colonies, and it's going to be the middleman. Same thing like the offshore dollar system is actually operating on today. Think about
Hmm.
it. What is it? Where does it derive its franchise? It's on the ships that load up in Shanghai or Hong Kong or Persian Gulf and take them to the consumption centers, and you make the vig in between. Like that's
Yep.
actually the collateral of the offshore dollar system. All right, so
Hmm.
South Sea Company, it's supposed to be the same thing. It's the monopoly rights on a trade franchise within the British Empire or like into let's say the Caribbean. Like you're focused on the West Hemisphere here. All right, that thing also booms and busts. Like it peters out. It lasts longer. Like it goes through workouts, all of that stuff. It like survives and gets acquired, takes on new forms. Versus Mississippi Company is just
Right.
like it's a full write off.
It's a tulip bubble.
All right, so back to modern day with SpaceX, the way I see this, all right, we're in the same or a very, similar situation. Like we got this credit bubble. We can't let it collapse upon itself, otherwise that'll be massively deflationary systems, social structures, all of that just takes a hard, face plant.
Right.
I don't think that's ideal for anybody. You need some like diffusion mechanisms. Like if you're thinking of a bomb diffuser, it's like, all right, where are we going to divert that energy? Like
Right.
the movie The Hurt Locker. It's like, all right, this
Right.
thing's going to go off. It's just like, let's make it direct that energy where we
Hmm.
want it. All right. So the way I think about SpaceX and then the AI build out, it's like, yeah, cool. We got a new technology. But it's very similar in nature. What we're doing is we're selling the overall, like the general public at this point. This thing, now that it's IPOing, it's moving the SpaceX project, all the XAI, like they're bundling, is my understanding. All of
Hmm.
that is into this one thing. It's like, all right, guys, one shot here. We're going to IPO this thing. The indexes who decide the weights for the S&P 500, they change the rules so that the SPOI ETF, everything that benchmarks the S&P 500, it's going to be included. So that means all of the capital that is referencing that index as its benchmark will also pull into that, like month end, like the next
Yes.
rebalance. It's gonna
Right.
suck all of that in. And so what you're doing is very similar with the public, where you're selling the UK capital base on the South Sea Company or the Mississippi company
Right.
to the French public. The carrot in front of everybody that we think is going to be this massive thing is, oh, we're going to do trade now. We're going to get our own VOC, and this is going to be massive. Um, This iteration, the way I view it, is we are dangling in front of everybody. It's like AI is going to be massive. It's going to be so big, all that stuff. And from a technological standpoint, that may or may not play out. Same way, like railroads were huge. Like they made a big impact. Or the dot-com
Internet, bandwidth,
companies, yeah,
dark
made a big
fiber, all of
impact.
that stuff. Yeah.
Yeah.
Dark fiber, WorldCom. Like
Yeah.
that's,
But when you actually read about the scheme for the South Sea Company and the organizers, what it actually was, it was a way for a state whose financial situation was in dire disrepair, and it was that same thing we talked a lot about last time. It's like, all right, you got to come up with some financial scheme or mechanism to fund the government, right? So what they did, they run up this equity bubble. What that does, you create a big nominal balance sheet number for your equity holders, all that. And then that allows the government to come in or the state to come in and raise debt or credit-based financing. Like you're actually you're marking up asset prices. You're using the just kind of the animal spirits of people. We get way over our skis. We tap into euphoria. It's just human emotion. And then from there, you can place the debt, right? Because people will fund it on margin borrowing, all of that. Now, didn't work out for the South Sea Company, Mississippi Public Company, because there were the underlying economics were not there. There was just no trade to actually service the cash flows or service the debt for someone's balance sheet. The key thing is though, it's not the government anymore. They turned out their debt. They got their money today to go do what they wanted, which was like engage in the geopolitical, power struggle. But it's the speculative, investment community who takes the write down. So I see it that what's going on with the SpaceX IPO, we're moving into that process. And, when Dave Collum, comes up there, I think one of his points on his letter this year was the actual PE ratio of the triple Qs is like 100. It's like, this is so overvalued. It's like, well, that's true. But it's actually a function, like it's a monetary output, like that high PE ratio. It's driven there because of the money. And the way you actually get the correction is actually someone takes their losses. Like same thing, you overbuilt railroads. Turns out there's no traffic on this line. I guess there wasn't enough demand to take people from whatever Wichita, Kansas to Santa Fe than we thought. This isn't profitable in like 1850, right? You're like, oh well, someone's going to have to take this loss, and it's like, well, it's the shareholders. So the step we've made, it's like, all right, SpaceX is very much a part of that process. You can kind of see it behind the scenes. Like, all right, it's not even hidden where it's like quasi state, connect, like all of like what used to be NASA, full stop in one vertical silo. Now they outsource like that. We can't get to the space station, project right now without SpaceX rescuing us, the private sector, all of that. So there's some truth. This will, if this, technological trend keeps going, there will be returns. But I think in general, the way it tends to work is you get the markup in the equity bubble. The state pulls in the financing it needs for the short term to get it through the geopolitical contest or, when things have gone hot. And then the equity, the investors, someone takes losses. And then what that's actually doing is think about this now. You look at like memory prices, DRAM, it's like up and to the right. What that's doing is the actual private economy is pricing out all profits of like a given set of resources. And eventually what you do, if you just let this thing keep going, the amount, like the nominal profits that can be made at the resources to translate, from inputs to outputs. As those prices rise, eventually the amount of profit comes down, and eventually it turns. At some point, it doesn't just zero. It's like it's negative. It's like, well, if you crank up, this 16 gigabyte, memory kit from where it is a couple $100. If we crank that up to like $30,000, it's very obvious. It's like, well, no data center is going to be profitable. And then you take the markdown, and this is where we went in the 2000s, all that, black fiber, all of that. It's like, well, the price is so low. And it's actually at that point, once the prices come down, and then that underlying growth is actually, it's there. They were right all along. It was just a matter of timing. Low prices means then the actual real economic growth on that technological trend, then that's where it's actually built. But
Yeah.
to get from A to B, it's a
We have to go through
messy, yeah,
yeah. We
it's a
have to go
messy
through this messy
process.
thing. And this is borne out with what we're seeing from AI. And there's no, they priced up these tokens to use AI, and then nobody actually wants to buy them. I was chatting with Dexter White over the weekend about this, or last week about it, and he's like, um, there's, you're looking at all these people. What I said the other day was, we were chatting about this. Is like, these people are like, went out and they bought $100 million or $200 million worth of tokens for this, to Anthropic for this AI work. And everybody's like, why did you do that? Like, why did you spend that money? I'm like, it's Google AdWords it's just Google AdWords all over again. It's companies buying these tokens in order to have them in reserve to do something with what? When most people were using Google AdWords, go back 7-8 years ago, when somebody, it was one of the CEOs, I can't remember what company it was. He's like, so you're telling me that we spend this amount of money with Google AdWords to buy our own company's name to make sure that we end up first in search on our company name?
Mm-hmm.
That's fucking retarded, and I'm not doing it anymore. And he shut the whole project down. And the Google AdWords guys were like, but no, like, it's the same thing. So AdWords, and we're all kind of downstream of that today, if you really stop to think about it, because those prices that were driven by Google AdWords created literally what we're doing right now, which is having a podcast, and someone's trying to and we're all trying to kind of, in effect, make a dollar off of the advertising space and the ad rates of this horseshit money that's floating around. It's all just downstream of interest rates not supporting the actual return on investment on any of this, when the companies who were buying all this Google AdWords weren't getting any return on it, because they were having to literally just, it's like an arms race
Mm-hmm.
against scammers buying, Kentucky Fried Chickens, buying a Google AdWord and Kentucky Fried Chicken in order to sell scams in India, that wind up, higher in the Google ad search rankings than Kentucky Fried Chicken did.
Mm.
When Kentucky Fried Chicken should be the first website you go to that Google should serve you. And that everybody's like, we were chatting about it over the weekend, and somebody brought it up. He's like, well, why do we do any of this? I'm like, well, I have to buy the AdWords in order, like, why don't we use Google anymore? Because the first 4 pages of results I get from Google are ads. So I use AI to get past Google, and now I'm having to use AI to get past Google in order to get the information that I want. And then AI is charging me too much money, and I don't want to pay for that either. Right? And there's no ROI on any of this stuff. And one more data point, when you look at all of this, and this is all effectively a bubble, Microsoft finally came out and came clean over the weekend and said the uptake rate of people actually using Copilot, Microsoft's Copilot in Windows 11, is like 3% when they shove it in your face and make you use it.
Mm-hmm.
It's like right there. I don't use it on my Windows boxes. I'm like, I don't want this thing in my face. Like, you're trying to hand it to me, and I won't use it.
Mm-hmm.
Like, so when I look at all of these things, I'm like, oh, that company's going to zero. Like, you're going to start charting which companies are going to go to zero in this model that you just laid out, Matt. To me, I'm looking at Microsoft going, I ain't buying that. And everybody, and in the finance space, to give you a perfect example of what I'm talking about, the advertising arm of Wall Street that's been desperately trying to build all this stuff up to push all this nominal value into, they've all been screaming for years that Apple's behind an AI. Apple's behind an AI. Apple's like, I'm not paying for that bullshit. We're a technology company. We're a hardware company. We're not a software company. We'll just let everybody else build out all the LLMs, and then we'll pick and choose and make and then when we're ready to actually deploy it on our devices for our users in a way that they can actually derive value from it on their device, we'll just buy it from whoever gives us the best deal. They chose Google. You know why they chose Google? It wasn't because Gemini was the best. It's because Google's already paying them for some stupid amount of money every quarter to pre-install Google as the default search engine on every iDevice in the world. That's why. And so Apple doesn't have to do anything. Now they can just like draw off that money that they're getting from Google and use it to get and to take Gemini and turn it into the private AI for every person using an iDevice in the world. And they get the users get all the benefit of all the R&D that was done. Apple spent no money on the development, and they're actually using existing cash flow streams. And we've been sitting here, and Dexter and I have been sitting here watching this like the last 3 years, going, I know exactly where this ends. We know exactly where this was going to end, and I'm like, oh. So you can see it coming, and what we're really looking at in a long run is it still comes down to the TLDR on this entire story is that at the end of the day, you still got to make things that people want. And in this case, it happens, in this whole story happens to be, well, we want our iDevices to be able to drive efficiency and to drive, a better use case for us to make our living, to use this to make these or make coffee or, cigars or, food or, tool and die shops or whatever we're going to do. And so, the SpaceX thing is interesting because clearly what they're selling us, and I think you're right about this, Matt, when you look at it conceptually, how did they sell the South Sea company? We're going into a new land and we're going to go create new revenue streams in this new frontier, or Louisiana, this great vast untapped thing, and you engage people's imagination. Well, what's the ultimate imaginative process? Space. It's the only frontier left. We've explored the planet, and it's almost cheaper to go into space than it is to go to the Arctic or the Antarctic, because that's just hard. Like, we know more about space than we know what's going on at the bottom of the ocean, right? There's certain things that are, space is actually, once you get out of the gravity well, space is easier to explore than 2,000 or 3,000 feet below the surface of the ocean because of the pressures. Like, that gets into serious friggin' metallurgy, and that's hard. And that's a negative ROI, because that's literally saying, hey, we're going to take this beach ball and we're going to pressurize it and we're going to try and push it down 3,000 feet underwater in order to get humans down there into an environment where we can actually do something productive. What are you going to do down there that's productive? If you stop to think about it. But there's plenty of things productive to do in space if you can overcome the limitations of the low gravity well, of this, all those other things. And that drives the desire to build shit. Not to say that there's not plenty of shit to build here on the ground, because there's plenty of shit to build here on the ground. I'm actually more interested. I mean, the SpaceX. So I get what you're saying. I think the SpaceX IPO is an interesting way that's going to play itself. That is it potentially, the boom and bust cycle on that is going to be interesting. It's going to be real and it's going to be durable. But what really matters is that it's not just what SpaceX is trying to accomplish by sending rockets into space. It's the downstream technologies that get used terrestrially. I remember when I was a kid and we were talking about the space shuttle, in the 80s, and guys like me and my friends were all like into this stuff, right? It's always been like into this geeky shit. And it was like, well, why are we? And the average person, like your parents, were like, why are we spending all this money in space when we've got, roads to fix and we've got, buildings that are falling down and blah, 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 blah. I was like, we're not spending the money. We're not shooting dollars up into space in order to put McDonald's up there. We're spending money on technology that we're going to use here on the ground. And it's and that's really what the girl is. Yeah.
I've interviewed Apollo 16 astronaut Charlie Duke, as well as the chief engineer of NASA JPL, Rob Manning, and they both have two great points. They're like, number one, it's we're building stuff that trickles down here and helps everyone here. And then the second thing is like, and the thing we're building is here. Somebody's putting together the really fancy thing here. And it's not like, and it trickles down. No, it's not up there. It's we're building the fucking satellite here, and the trickle down effects are here.
Right.
What are you
Right.
talking about?
Right. And then we're going to put the satellites in space and we're going to generate.
They act like we're sending ICBMs of $100 bills up into orbit and then hoping that a magical piece of technology falls. Like, dude, we've moved away from like Aztec sacrifices. Like, we're not. Sorry, keep going.
No, you're right. Like that's it's just funny. I just love the fact that you're like, yeah, we're not doing that clearly. So, and the question then is, you've got all this nominal money laying around. You've got all this nominal stuff that you have to, these nominal dollars that have to flow around in order to get people and do productive things with them in order to hold nominal asset prices from deflating.
Mhm.
Right. So what do? You open up new environments to shunt those dollars into, and as long as those become even marginally profitable ROI, some of them are not going to be. And I think that at a certain level, again, like my I can pick winners and losers in the AI space. Like, does anybody believe that Anthropic is worth what it's nominally worth? No, it's not, and it's gonna implode, and the shareholders are gonna get crushed. It's no different than the money that was pumped into Theranos is all gone as well, right? Theranos is gone. Like, it doesn't exist. And everybody who made a bet on it for political reasons, and they were dumb, like, at a certain point, yeah. And it's a question that's going to be, who's the bag holder at the end of the chain of where this collateral, where this attempt to collateralize to keep the leverage over the collateral, who's going to wind up at the most vulnerable at the end of the collateral chain? That's the person who's going to go bankrupt. Yeah. And that's where the money is going to get sucked into. And that's the value that's going to be dropped off the equity markets. To your point earlier about SpaceX going into the S&P 500, right? It's a capitalization weighted index, as opposed to the Dow, which is a price weighted index. This is important because when SpaceX comes in at a $2 trillion capitalization, that means that it comes in and it's going to, we're going to set the value of the S&P 500 at its current, we're going to add $2 trillion worth of capitalization to the S&P 500, thereby raising the value of the entire index and dragging everybody higher. But what is that going to do? It's going to expose who's not capable of sustaining that valuation, and they're going to get preferentially destroyed. They may go up by 20% with this, but then they're going to lose 50%. You're going to watch all these companies, get crushed crushed down the stack, and who was at the number 50 on the capitalization, they're going to drop to 100.
Yeah.
Or 200 or whatever. They're going to drop down in terms of capitalization, and other companies are going to take their place.
To interrupt, sorry. There's an example that I'm very foggy on. But it's from James Bamford's book, Shadow Factory, the post 9/11 ultra secret NSA. They're going all into telecoms and all the private companies and stuff. And I forget when, but the book was written in 2002 or three, I think. So some late 90s there. All these bets on, I get whatever fiber optic was, or the precursor to, and one company, and I can't remember the name of it, the dude was like, really put it all on red. And he built this wild network that was way more it was able to do way more than it needed to. And no one wanted it. He couldn't make any money on it. And he held it. And then the NSA actually came in and they're like, we'll buy this because we look at this as, well, here's our own network. So who holds the bag? That's granted an example. Something like that, if there's a national security thing, you might I don't think he made money. I think he maybe made his money back, but there is something. So for something like space, which is the high ground, who's holding the bag? You might have the government come in and hold the bag. I'm not saying that's good or bad. I'm not defending it or condoning or whatever.
Right.
I'm just
Right.
That's an example that I'm very foggy on and probably shouldn't have used. But
no, it's perfectly reasonable, Matt.
Different thread. I'll make sure I come back to what I want to discuss. But Tommy, you bringing up 9/11, the supercharged MSA. All right, if Snowden's word is to be believed on this thing, well, put that aside. Is it,
for the thought exercise, let's say, is being honest.
Yeah. Okay. So there's all this architecture being built out, data gathering, all that. Like, who is that funding coming from? And I think if you like dive deep, I'm not an expert on this. I'm going outside of my well over my skis. Maybe you all have thought about this, but where does the NSA get the funding from to run this whole like data collection apparatus, the metadata, all that processing? Like at the end of the day, like where does it come from? Because if you're not, it's not a business, is my understanding. They're not selling the data, or maybe they are, but like how does it work? Like cash in, cash out. Like you got to pay employees, you got to pay electricity bills. Where is that all coming from?
And
And
that intelligence community revenue stream that the Eisenhower was talking about, that
yeah,
Smedley Butler was talking about. It's not right, but where does it come from? It's where the fuck they want it from.
Well, the big question everybody should be asking is, are we so fucking profitable as a society that we can fund, the welfare state for upwards of, depending on who you believe and what the numbers you believe, anywhere from 30 to 100 million people sitting on various forms of welfare and fraud, this, that, and everything else. Like, I'll be honest with you, I think we spend probably in excess of half of the federal government's budget. And I mean over half, not half of the deficit, half, Eddie. I want half of that money goes to all of these projects. And that we're literally funding the entire world in this respect. And that once you start cutting the fraud out, you start finding out what the real numbers are, right? And I've been convinced for years, like this is where, again, as a libertarian, I'm always like, dude, government's terribly inefficient. They're bad at this. Like, yada, yada. But at the same time, you're telling me we can't cut spending, right? But if the government is spending, if we can identify the fraud and we can stop wasting the money, then we can balance the budget. You can't hold both of these things to, at some point the whole thing has to either collapse or we start cutting it. We're in the part of the cycle where the zeitgeist, where the voter and the people are like, no, we're not paying for any of this anymore. And we just have to get to a set of states. And I mean this in, kind of the quantum mechanics sense. We have to have a series of variable definitions or variable values, like where as a zeitgeist we are okay with changing the fucking rules in the short term in order to radically move the population somewhere else. What I mean by that is that you have to get a majority of the people to just say, you know what, fuck you, we're not paying for it anymore. I don't care what you have to do, Donald Trump. I don't care what they say you're not allowed to do. I don't care what some traffic court judge says in Maryland. You're the commander in chief, prosecute foreign policy, right? That's the one extreme. On the other extreme is we know all these people are fraudsters. We know there's hundreds of billions of dollars going out the back door to pay for all this shit that's making our lives miserable. Stop it. How? I can't do it this way. I can't do it. I can't legally. Okay. Well, what do you want me to do? At some point, we're going to move the people to the point where they're going to be like, you know what? Don't care. And we have an opposition. We have people that appeal that want the status quo to be maintained because they're making money on the grift, and they're trying to hold us here. We want to go there, and at some point, Trump's like, "Well, I'm here. Do you want me to go there? To go from here to there? I'm going to have to declare martial law, put people in jail, suspend habeas corpus, do what needs to be done." You can't do that until the moment is right, where the people are ready to accept that, even for the short term. Similar to what Lincoln had to do during the Civil War, blah, 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 blah. Like, we're not quite there yet, but you can see that the arc of the zeitgeist is saying we're moving in that direction, right? And what I've noted, and I'm taking this conversation in a slightly different direction because it's important, because it's what informs this whole political fight we're in right now, because it's going to determine whether or not we get there or we don't get there. Whether SpaceX turns out to be a bubble or it turns out to be the basis for the quote unquote golden age that's coming. It all depends on the American electorate deciding at what point, the fight at the institutional level as to whether Trump has to pull that pin too early or not, and the people reject him for it. Because what you've seen from the moment he won the election, and certainly the day after his inauguration, was nothing but just arrest somebody, for God's sakes. He's betraying MAGA. He's doing this. It's been nothing but a psychological operation to tell you Trump is not giving you, the American voter, what you want, because they want him. They're trying to push him into doing this too early, knowing full well that the American public aren't that exasperated yet. And they're trying to shape the narrative and create the narrative too early so that when he pulls that pin, he blows the whole country up and we go right back to where we were previously.
I have a
That's
thought
their
on
goal.
that. Yeah. So,
but that's the fight, that's the meta fight that we're living in. But go ahead now. I'm sorry.
yeah. So the fork in the road on the electorate, which way is it going to go? I think look at elections, and I try to view it through the monetary angle, and then the monetary angle says, what are their incentives and which path do they want to go down? Because like the quote in military affairs, like the enemy gets a say. It's like, well, here now the people get a say. All right. So you mentioned two routes, like Americans deciding at what point. There's just arrest someone already. I think what you're tapping into there is this idea that the state's monopoly on violence is the solution to the problem. And I think if you get on that route, what you end up with is, in the worst case, like martial law, military state, or like you flip the public to like French Revolution type of scenarios where it's like, oh god, you get the guillotines out, your quote, lead futures, rope futures, all that.
Right.
That's actually not a good world for everybody to live in. It's going to be social
terrible world.
disorder, chaos, etc. That's not actually what most people would like say they want, in my opinion. Some people just want to, go to the bar every night of the week, and their whole goal in the life is like, who am I going to get in a fist fight with tonight? And that's that. Okay, there's that person, but that's just a dumb way to live, my opinion. Or you can pull them aside, like offer them an economic framework that gives them something better to buy into. And like, what do people actually want right now? I think this one's totally obvious. It's talk to young people, 20s, 30s, whatever. Listen to Tommy. I know he's off on break right now, but you hear him on podcasts recently. What does he say? It's like, I think I'm ready for a family. What do I want? I want a wife, kids, house. He's got his job. He's got the podcast. His rent's paid. He's got food in the fridge. All of that. I was like, what does like Tommy's peer group want in the world? They want those things. So if you can give them that and put them to productive use, like be citizens in the Ben Franklin sense of the word, actually participate in like a bigger picture social system where we're cooperating together rather than let's just go the violence route. I think we're at an interesting fork in the road. I don't know if Tommy will even hear that or be able to pick up on it. He's still out picking up his mail.
But no, you're right, Matt, and I mean that, and I know that that's what I've been arguing for for a long time to counteract that. I'm like, at what there's this the public is exasperated. They want people held accountable for their fraud. Well, the question is who. So they from my perspective, it's like, well, hey, how about we stop the money? How about we stop them stealing from us first, and then identify who's doing the stealing at the lowest level, the simplest, the basically the street hustler level. You're not going to get the drug kingpin when you start out with. You have to start with the corner. You got to clean up the corner. Going back to The Wire, like season 1 of The Wire. You clean up the corners, right? Then you can start rolling up to the next guy and the next guy and the next guy. And while you're doing that simultaneously, you're improving the people's potential to help themselves out of the malaise so that they can get the things that they want. And if that's the path you're showing them, then you diffuse the, oh my God, just arrest somebody, goddamn, that thing. At the end of the day, Hillary Clinton's not going to ever go to jail. But if your goal is to get Obama, then your goal is to turn Hillary against Obama, right? This is where we're near that level now, to be honest with you. We're getting really close to that. This whole, it's funny. I started going down this route a couple of weeks ago, and I mean this sincerely when I say this. When I started thinking about where did Iran get its nuclear material? Iran did not get its nuclear material by mining their low-grade shit out of the ground. They didn't. They didn't amass that. They didn't. If they did, they also didn't have the money to run an actual honest-to-God nuclear program. That money, they weren't selling enough oil to pay for that. Okay, someone was helping them with that. Who? And Trump keeps leaving, breadcrumbs in front of all of us. I got a text this morning from a friend of mine. He's like, "Oh, by the way, Fox News must listen to your podcast because they're literally talking about Hillary, Uranium One, Iran's nuclear program on Fox News last night and this morning. Like, it's now beginning to jump containment, that idea, because it was one thing to say, look, do we all agree that Iran can't have a nuclear weapon? This is the way Trump operates, like in the narrative framing space. Do we all agree on that? Are we all willing to, bomb the crap out of these assholes until they finally submit? Yes. As long as it doesn't cost a lot of American lives, if it costs some money, fine, no big deal. Americans are willing to pay money. They're willing to pay more at the pump for that, but they're not willing to sacrifice thousands of boys for it because of the terrible numbers of terrible wars that we fought where the goal of the war was, as Colonel Watkins likes to remind us all the time, the goal of the war was the war to continue grifting off the war. But if we actually have a goal and a thing and it's just going to end, and we're at the end of the day, the Iran war is cheap compared to the potential benefits. Americans get that, and Trump has made that abundantly clear. So now the question is, can we roll that up to the next level? And can we prove to the entire world that these guys were never negotiating? We have to break all that stuff down. We keep breaking that down and breaking it down until we get to a point where, oh, by the way, and we've found tens of billions worth of fraud in Social Security, COVID, CARES Act fraud, this fraud, that fraud, and we're taking it all back. And we're now starting to prosecute those people for the fraud. We're hitting all of these things at the same time, and it's improving it by degrees. It's a big system that takes a long time to fix, and all of this is happening out there, while underneath, as Russ Vogt put out the other day, the head of OMB, he's like, look, we've changed the way we disperse money so that all of that money that goes through Treasury with no budget codes, got news for you, budget codes. You want to get reimbursed for that party you threw at, the Giant Stadium? Got news for you. Got to submit a receipt for that. Notice they're not submit. We asked for receipts and they're not even giving them to us anymore. They weren't even. It's the fraud has begun to stop. And then the big question is how much of that fraud was actually going into the voting system, and how much of it was going into the election system to defraud us of our own, our own participation in our own society. Because it's what Matt just said. What do the young people want? They want to believe that they actually are a part of a society where they have a say in their future. And, and it's a big problem, and you have to show it, and you have to be consistent. And as if the state is the parent in the situation, the parent has to prove to the child, no, I have your best interest at heart. And this is how I have your best interest at heart. And this is why I put these rules and boundaries around you. This is why, and I'm going to work with you as a partner and we're going to work as a family to get us out of this terrible situation. And oh, by the way, we're also going to disabuse you of the notion that life wasn't hard when we were children, and that we had it easy and that you have it hard. That's bullshit. We all had it hard.
Oh yeah.
Life has always been hard. And that's a big narrative that exists within the zeitgeist today, that the boomers had it easy. The boomers didn't have it easy. Like, they didn't. They're as an ethos or as a group of people, they may have a skewed version of reality. And I'm not going to argue that point, but they're clearly being set up, obviously, by one group to create intergenerational conflict. I get called boomer all the time as a pejorative. Dude, I'm high Gen X. I'm the guy who's like been my entire life wanting to blow up the Death Star and burn it all down and start over again. Like nuke the site from orbit. It's the only way to be sure. Like I can go through all of it. Like, kid, you want to make $10? Fuck you, queer. I'm just quoting like movie after movie after movie that is like the Gen X ethos. Like, we're not boomers. We're the exact opposite of that. We're the ones who have been denied our political power by these people who have been held in power too long because of this rotten monetary system and this rotten financialization system that's allowed for these people to stay in power well past their use-by date. And we're in the inflection point of that right here, right now. And these next 6 months are going to determine, what course we actually go. And then, how we deal with that is a balance sheet problem. And that's where guys like Bessent and Trump, they understand the balance sheet problem. And worse as well at the Federal Reserve. And I think we should talk about worse at the Federal Reserve.
And Bismarck.
And Bismarck. And go back to Bismarck. Yeah.
No, we're on South Sea Company and Mississippi Company today. All right. No, I think, Tom, what you said, life is hard for, the young man always who's, the situation. Like, if your father doesn't have a business franchise, assets, whatever to pass down to you, it's like, well, you got to make it on your own here. So doesn't matter whatever the trajectory is, the monetary transition, even going offshore dollar, credit dollar, transitioning towards stablecoin dollar, an asset dollar, and then whatever comes after that, you're still going to have to put in the work. It's does the underlying framework deliver like an economic incentive? And then does it deliver on that incentive? And then if you can do that, you're bought in. I guess one Bismarck today. So that's why he launched the first public pension scheme. It was like the precursor, like that's where FDR got the idea for Social Security. It's like, okay, you get everybody to participate in the public savings scheme to ultimately like fund the state. But what it turns out is like you're giving this section of society a carrot to adopt, come in, align, and they now have a direct incentive to, if the system's working for them, if it's giving people what they want, they'll participate in that. Now, it was actually how I got down the Bismarck rabbit hole initially was asking the question, how did that pension scheme collapse? Right? Because you're talking right now, if you talk to everybody and their mother, they're going to say, oh, the US, it's going to collapse under the entitlements programs, the just supporting that beneficiary base, all of that. It was like, all right, well, how have those failed in the past? That's where it's actually the Weimar hyperinflation that deflated the purchasing power of those pension beneficiaries. It was actually World War I that wiped out that benefit scheme. And, on top of everything, like World War I was wiping out the social order of Germany, and it came through the money. So put a pin in that thought, leave it there. But yeah, so life is hard for the middleman. I think the thing to focus on, this transition from offshore dollar to the stablecoin dollar, still going to be hard for the man, right? You still gotta, like Tommy, like as you've been on in the last, I'd say in the month or two, I've noticed like something changed with you, at least as you presented it publicly. You're like, I think I want a wife and kids, and I want a family, I want a house, all of that stuff. It's like, all right, that's the direction you need if you're going to have a productive society. Like we need 100 million of Tommy in their 20s and 30s doing that to actually reap the benefit. Think about like 100-year timeframes. Go back to the South Sea Company, the Mississippi Company. What they were doing is they were offering this, they were writing a check that they couldn't cash, and they got everybody to participate it. And it turned out like there was those funds were overdrafted, all those checks bounced, and those speculative schemes collapsed. But the actual economics didn't. So if you think about it, what was the Revolutionary War? Well, that was the American colonies, taking over the northern, I guess to say coastal port cities that operated on, that same trade franchise that, the South Sea Company was supposed to be
Mm.
running. So the American revolution actually got us what it bought us was our seat at the table in that economic franchise. All right. Mississippi Company, same thing. All right. You see the French, they're like, we're going to run this out of Mississippi. We're going to export out of New Orleans, all that. Failed for France. Like they couldn't cash that check. But who reaped the benefit of that? Well, Thomas Jefferson comes in, buys out that franchise out of song for
Mhm.
credit dollars, right? And while Napoleon's, doing his thing, trying to, unite continental Europe and integrate Russia into the European order. Americans, like think about Tommy's starting a family, homesteading, all that stuff. That's what we were doing in America from like 1803 to 1820s, 1830s, all of that. And so that actual economic system, like that's what actually pays off. Like that is the
Mhm.
vision. So if you design this economic incentive where you can bring stakeholders in, you got something to offer young people, that's how you win, in my opinion. All right. So
Mhm.
going back to the Civil War, this greenback where we transferred. All right. Last episode we started at Panic of 1857. See this credit collapse. Tom noted Buchanan didn't bail out the banks. That got him out of the like. It was like you're
Yeah.
pulled. You're out of the game.
Yep.
Uh,
Yep.
we get we get Lincoln in the 1860 election. The South just immediately secedes because they know Western expansion. Like slavery was halted with any Western expansion of the United States, so they knew their own economic franchise that they'd built up, how to monetize the Mississippi Company's bubble. They knew their economic system was not long for this world. So that's when you get this collision between different power centers when it goes to, military kinetics, kind of like you're seeing today with, the military footprint, Iran, Ukraine, all that stuff. It's that same thing. It's two different economic models. What you're trying to do is build a system where you actually have like the economic incentive makes sense and the checks will cash like for whoever
Mhm.
buys in. All right. Um, so Civil War, right? You start with a credit collapse. There's deflation in the system.
Mhm.
It's kind of recessionary, depressionary type of situation. You get into the military conflict. By like a few battles in, we realize like right before Shiloh, right, which was April 1862, I want to say,
Mhm.
you get the
Mhm.
greenback, which is like the Treasury was running into its funding limits, and we needed to come up with a solution. That's where we get this note, right? It's quasi debt, quasi money. Found a way for the Supreme Court to say we can do this. Footed to Congress's Legal Tender Act, which they passed like early 1862. Um, so you got this big expansion in money supply, um, coinciding with kind of everybody realizing like, oh, this Civil War thing, it's going to be a bit of a grind. Like this is not a situation where one side is going to quickly roll the other. Um, so what you actually had there, like think about it in shift of monetary policy. You went from like deflationary recession, credit came collapsing, there's no bailout to all right, now we're going first derivative. There's money supply is increasing, and then with the greenback, the second derivative is positive. So it's increasing at an increasing rate. So think about that in modern terms like QE, right? After 2008, we shifted to QE, which was all right, we're going to increase money supply by the central bank, pulling out the excess debt from the system, buying it closer to par than possibly it should, like fair market would price it at. And then we're going to inject new
Yes.
money into the system. So it's like on net, you'd say it's positive monetary expansion. And then up until 2020, I would say, the aftermath of COVID, all of that, I'd say that first derivative was positive, where like, all right, money supply needs to increase. Now or the system dynamic was saying money supply increasing. I think we're still in that standpoint. Like we're gonna have everybody knows this at this point. Like the U.S. government's deficit situation. Like if you ask anybody, it's like, yeah, this doesn't work. The math doesn't math. What are we gonna do? And I think the accepted approach right now is just like, well, we're just gonna keep running it up. Like 40 trill, next month 41, we're on our way to 50, and then like just the tree will grow to the sky. Um, I think what's happening with the stable coin, like because we now have a liability dollar moving to an asset dollar, and you needed all these sequence of events, things to get done. You needed to kill LIBOR, replace with SOFR. That means you have to have a T-bill for the marginal dollar in the system for overnight funding to
Mhm.
be created into existence. Now you're moving from, offshore credit IOUs that just the nominal number of credit claims just go up outstanding. This shift over to the stablecoin transition, what it actually does is it flipped that second derivative from a positive. I don't know if it's negative yet, but once fully implemented, it actually flips negative, right? So it gives you a route for that growth and money supply to ultimately slow down. It puts a ceiling eventually, or it
Mhm.
gives us the mechanism to put a ceiling on that
Yes.
process. Now, to put this in Civil War terms, it was actually like by 18, call it 64, once Tom, you've been into this, Grant took over, we
Mhm.
realized like, oh, this guy can get it done.
Right.
Then the political discussion started turning into when can we slow down the issuance of greenbacks? And then eventually, over the course of like 10, 15 years, it's like, when can we repeg to gold? So it's like, all right, when can we slow down that issue? And so my point here, all right, this transition is going on
Mm.
underway. Now we brought up an interesting angle. It's always going to be hard for the little man. Like you have to work your butt off to get out of the system. But my opinion, most people like the actual American identity is like we want to work.
Right.
People come to America generally not because it's easy, but because like there's opportunity. Go settle go
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 farm,
settle the
settle
West. Yeah.
Oklahoma, go do the Oregon Trail route. None of it's
Mhm.
easy, but it's like, hey, you actually have an opportunity here starting from nothing. Like if you weren't born into the landed gentry or you weren't set to inherit, something, this is where you can go make
Right.
it. And that's why America is what it is. But in the Civil War, it was like, well, what does that mean to get out of this? So you're going to get drafted to fight on one side. Tommy, you mentioned
Mhm.
like right off the boat, like they're pulling in the Irish
Right.
at one point. Like,
Right.
um, and then afterwards, like once the dollar circulation, the greenback actually the issuance slows down as that negative second derivative takes hold, and you can taper off that money supply growth. That's actually painful as well
Mhm.
because like
Yeah. No,
you don't
it's
have that
painful as well.
that free ride or
Right.
that not free ride, but like the tailwind at your back from
Mm.
just money supply cranking up, and what it does is it makes debt claims easier to service. So at some point,
Right.
either way, whatever happens, you're still going to have to work. But over the long term, if it's 10, 20 years and people can see over the course of their lifetime that they're buying that like, oh, I'm getting somewhere. I'm not just getting rug pulled every 7 years in a financial panic while
Mhm.
Hank Paulson, Tim Geithner, and the people that we elect to represent us, put in the key roles. Like nothing's working for me. Why should I even work? I'll just
Right.
sit on the sidelines. That like if that's what's happening, like people don't buy into those economic systems or incentive schemes. Versus if you can actually structure this, this is I think what Bessent, this administration are really trying to do, and then comes down to it's bigger than this administration. It's
Mhm.
American businessmen, capital, all of that. They're trying to get something back
Yep.
and put that system in place. So yeah, I think like same way America capitalized on these equity schemes, South Sea Bubble Company,
Mhm.
Mississippi Bubble Company, which were ultimately to bail out the state, like European power centers,
Mhm.
states. I think the name of the game here for the rest of the century is like, all right, let's make this thing work for the U.S. and Joe Sixpack.
And the interesting part about it as well, just to remind everybody, at the rate at which we can, there's two things I need to bring up just to remind everybody. The first, that when Matt invokes second derivative, he means acceleration, the rate of acceleration, the rate of change. right? First derivative is velocity. If the amount of money is the money supply is, is position, is the function, the velocity, the rate of change of the money supply is the velocity of money, and the acceleration rate, it turns negative. It means you actually, what he's saying is that you're actually slowing down, not just slowing down, but reversing the rate of the rate of change, so that you do break off to an asymptote in this respect. So we're looking at a ceiling of a certain number of dollars at the far end of this, and that's going to then balance against a certain amount of assets on the other side. So while this is happening, you're then also trying to grow the asset side of the balance sheet so that the two of them at the end of this process are basically the same or close to each other, or there's a small leverage. There's a where I've always looked at it is like there's an amount of collateral that we'll accept as a leverage ratio based on the amount of money in the system. It may be 1-to-1, it may be 2-to-1, it may be 3-to-1, it may be 4-to-1. It's probably currently 20-to-1, pick a number, but that number has to come down. The asset side of the balance sheet has to come up. And so that's the first thing to understand. This is just getting into basic, mathematics is the way Matt is describing this. I'm reminded regularly that I make the same kinds of arguments and people don't know what I'm talking about when I say, second order effects, third order effects. I'm talking mathematically, and everybody's like, "Dude, the fuck you talking about? You've got degrees in chemistry, so you understand calculus." Most people don't, so you have to remind everybody this is about that framework, the intellectual framework. When you're using a mathematical argument like that, it's very important. Most people have not taken calculus in that respect. So there's that, and then there's the other thing is, what else are we doing to accelerate the process of getting to that ultimate number, to get there as quickly as possible and to grow the asset side of the balance sheet as quickly as possible? Well, we're taking the money that flowed into the offshore dollar system and we're bringing it back over here to fund investment, to grow the pile, to grow the asset side of the balance sheet faster, and then open up all of the assets of the United States that were written down to zero through environmental policy, this, that, regulation, all of this stuff where we said, well, we're not allowed to build refineries. We're not allowed to build new roads. We're not allowed to open up Anwar. We're not allowed to do this. We're not allowed to do, why? Because of spotted owl, because of this stupid fucking thing, or because Just Stop Oil, or whatever the hell it is. And when you start to look at all of those all of those projects, all of those impulses within our society that have been grafted onto our zeitgeist, and to shift people's perspective and shift people's priorities to that versus production, you realize that was an operation by the people who want to destroy the United States and want to destroy humanity and want to keep humanity low and on a drip feed, on an economic drip feed where they retain the power and people are not incentivized to be part of the system. It's all part of the same psychological operation and real world operation, which is that the oligarch class that set up this system today is the one that is arguing that we need to stay in that system. And to Matt's point earlier, when he said it's really about two different systems of economic reality, it's no different than, my friend Alex Craner says, it's like George Soros says, two systems of governance, globalism versus nation states. It's all the same fucking thing, folks. Just different ways of describing the exact same thing over and over again. They want us to be energy. I was literally chatting with Dexter White this morning. I said, think of it this way. You have, for most of our lives, we've had, Dexter operates from the perspective of we're Gulliver and these offshore dollar fucks, Davos, City of London, whatever you want to call them, are the Lilliputians trying to keep Gulliver from going in and building shit. So you bind down the winners and you subsidize the losers, which is why they built China. Okay, they subsidized China with our money to build China up, thinking they were going to take China and use it and throw it at the United States and then decamp over to China and then destroy us. That's all they're doing. They're just moving their pile of capital that they stole 400 fucking years ago from the indigenous populations of the world during their age of exploration. This is European history, like European colonialism, and all they do is move from place to place while preserving their pile of actual capital. They're the ones who control all the fucking gold and the silver and the actual assets and the trade franchises and all the rest of it. And they want to hold on to that. And they don't want it. They don't want it to go to the plebes. They don't want it to go to anybody else. And we're saying, no, we have the will, the ability, and the assets to defend that which we own, because we have the most powerful fucking military in the world. We have the most powerful legal system in the world. We have the best corporate law in the world. We have the best tax law in the world, as bad as our tax law is. And capital should flow here, but they've done everything imaginable to make it as horrible as possible for people to build capital and build wealth in the United States, and yet still we continue to do so. So what did they do? They spent 50 years building a managerial state that sucks trillions of dollars worth of tax money on a yearly basis to subsidize the rest of the fucking world to destroy us. I got news for you. That world is over. That is exactly what Trump just blew up when he attacked Iran. Symbolically. Because Iran was a major network node in that. Venezuela was as well. What we saw in Colombia over the weekend with the election there, the world is saying, I don't want to live this way anymore. Trump is building new institutions outside of the existing old European institutions to build a framework for which we can govern ourselves outside of their old system. That's why Mark Carney goes to wherever and gives a speech and says the rules-based order. He goes to Davos after Trump says globalism is dead. He says, and Mark Carney says the rules-based order is on life support. He's right. Like, they're telling you exactly what the fucking fight is. So what Trump has to do is convince the rest of the world to reinvest in the United States as the leader, Gulliver, to get up from the Lilliputians, the Frances and the Spains and the Britons and all these old colonial empires, and go, these people are irrelevant. I'm going to partner with China and Russia and the Gulf states of the Middle East, and we're going to bring South America out of the 19th century, and we're going to help, and Russia's going to finally be allowed to help the Central Asia come out of the Dark Ages, and we'll bring Iran along as well if they're willing to show some basic fucking humanity. And the IRGC is saying every day no, 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 no. We have a right to a nuclear weapon. And they're like, the whole world's like, fuck you, you don't. No. And then so that's why Trump is always, every trade deal he made, he kept saying, I just got $500 billion worth of new investment into the United States. Another $400 billion here, $500 billion there. That's why he emphasized those things, because that's how you speed up the process by which you sit there and go, yeah, well, we have to grow the debt pile, but we're going to grow the asset pile faster until we get to that steady state sometime, I don't know, 20, 30, 40, 50, however long it takes. But we can get there in 10 years or we can get there in 50 years. It's up to you, the voters, to decide what we're going to do. But you got to get rid of these assholes in Congress like John Thune and John Cornyn and that's why the political fight is so important and why they're fighting him so goddamn hard. Because they want to just keep running the old grift and go back to the previous status quo. That's why the entirety of the British establishment has been fighting tooth and claw over Brexit for the last 10 years. Because they were always about destroying the UK and the British people and Ireland and Scotland and Wales, because they wanted to bring them into the European mindset and the European rubric of no private property, no nation states, no agency or economic franchise for the individuals. Period. That's why it's the USSR. It's why it's the Fourth Reich, whatever the fuck you want to call it. That's where all of my analysis comes from. And all Matt is doing is showing you the historical precedent, how we got to where we are today, and how we've and to watch each of the cycles of the previous cycles of history, how we've moved to the position where we could be here now. It's really actually quite fascinating. It's very Martin Armstrong, actually, when you stop to think about it, from a 300 or 400 year cycle, the cyclic waves of history. So I just
don't quote my algorithm my computer. It's like this is what it's telling me, guys. But no,
Right.
I just try to bury your head in the history books, and
Sure. For sure.
besides just being an escape from just the knife fight that kind of is
Hmm.
discussion
Hmm.
today. Go live out or go put your head in the context of these key things happening
Hmm.
before in the stakeholders who were making the decisions,
Right.
and then try to apply that to modern day circumstances. And believe it or not, I think there's a quote from a financial writer, James Grant, who puts out a newsletter, the Grant Center
Yep.
Trade Observer.
Yeah. Yeah.
He's a little more highbrow than
Yeah.
GG&G community.
Just a little bit.
Just a little bit, but no, he says he has a good quote. The most undervalued assets in on Wall Street are history books because nobody reads them. It's like it's pretty true. We just forget, and then it's also hard to connect the dots
Hmm.
and think about how the entire economic franchise, the financial franchise, is actually built, and that's what our political order is really grounded on. It's the base layer. So yeah, you mentioned the trade deals. We're
Mm.
thinking about that. It's going to, fisticuffs. We see those headlines in the news, but I think the way most of us read it, it's the same way we cover the Fed in financial, mainstream
Mm.
media, where it's like, Fed, the market was up today because Fed said we might cut rates, or, whatever. It's like,
Hmm.
it's ex post, play calling, doesn't make any sense. But think about it this way: the trade deals are the actual business franchise. And for most
Yes.
countries, like, think about the United States as like one like self-contained economy. We actually have the ability to trade between ourselves, like all like just the compact that is the US Constitution, where the federal
Yes.
government basically guarantees interstate commerce, right?
Hmm.
It lets everybody play on an equal playing field. It's a level platform. Not
Right.
completely true. There's
Right.
areas that clearly need to be grazed down and leveled, like, all right, the Federal Reserve
Hmm.
System for one. Like, the existing
Hmm.
monetary structure is the field tilts towards California and away in New York and away from Mississippi,
Hmm.
like by design, as you mentioned, Tom.
Yeah.
But
Yeah. Yeah.
by like compared to all other like encircled,
Hmm.
economies, it's a lot better than anything else that's on
Agreed.
offer. All right, so most other economies, and this is kind of what the Eurozone is trying to do as well: integrate, open up trade, let people move. Same way that, hey, I can go take a job in Washington State, growing up in Missouri, and no one can stop me. I don't have to go get a permit to, change my
Hmm.
state residence. You kind of think about the Eurozone project. Like, if you spin it in that case, you're like, oh yeah, I can go from Greece and go get a job in, I don't know, Luxembourg, being a hedge fund manager, allocating fake
Right.
euro dollars for, some state cutout operation. Hey, odds are,
Hmm.
if your dad wasn't doing that job, you're not going to get that job. But
Hmm.
you can still move. Like, you can still go from, wherever. If your local economy is, down, you can move from Greece, Portugal, move up to Belgium, whatever. So there's that same element. But for the most part, most other economic structures, like those little contained zones, they are reliant on trade. Um,
Hmm.
US is the one that stands up, on its own, within itself. Like, it has a lot of productive growth potential in front of it. Like, still,
Hmm.
as crazy as that sounds, people think 250 years in, we're even scratching the surface. Look at a population density map. Go Google image them, and you can see like where population density is, where economic density is, and you see like, all right, Southeast Asia, like Europe, the cities, like they're just like these big spikes. In the US, we only have like one, like Manhattan,
Right.
that little tri-state area. Maybe you could say like the Northeast Atlantic coast, like the corridor, DC,
Hmm.
Philly, New York, all like those little pockets. It looks kind of similar on the density map. But then you think about, dude, what can the North American economy actually support? It's like we're not even close to scratching the surface on our
No,
on
not
our
even
true
close.
potential. All right.
Yeah.
So that's where these like trade deals, if you think about it, all right, I talk about like the business, the global franchise of trade. Like, that is the actual business. That's why I brought up Dutch VOC, South Sea
Hmm.
Company, Mississippi Company. Like, that is the thing of value that all of these economies want. So if you think about these trade deals taking place, just sort descend on bilateral trade pairs, and then like, all right, that's where the value is. There's no perfect ranking of these. Like the biggest one for cross-border trade is U.S. Mexico. Second,
Mhm.
probably US China. Third, US Canada. That one's on its behind, right? Like just
Mhm.
given everything over the last 18 months. USMCA, all of that, stuff
Mhm.
negotiated in Trump's first term. That whole thing is again up for renegotiation. You see it in actually the shift in the last, I'd say, week or so coming from Carney.
Mhm.
They what happened? They got the economic prints in for Q1 GDP, and Canada's soft, right? They're, whether it's declared technical recession or, real recession,
Mhm.
whatever. A true recession only comes from the recession vintage of France, like that sort of thing. We're
Mhm.
arguing in 2022 whether all of these economies were actually in recession. It's like at the end of the day, it is what it is.
Mhm.
The defining feature, like you can go through all of these statistics, what happens with employment, what happens, with GDP growth, blah, blah, blah. Some economists will duke it out. These numbers will be rewritten for the next 2 or 3 years. But the real time indicator your system has is what is the demand for monetary creation? At the end of the day,
Mhm.
it has to come from businesses taking on new borrowing. That the demand for money comes from growth potentially in the economy that entrepreneurs go out and borrow against, they'll raise capital against to go pull that thing forward into the future, that prize.
Mhm.
All right. So you go through these trade deals. All right. You start descending. Most of them tie to the US, like the top like three: US, Canada, Mexico, China, and Canada. You think about the dire situation right now. I'll talk about the transition from the Fed dollar or the liability offshore dollar towards the stablecoin dollar. Um, like part of all of this, just violence we're seeing, I guess, for lack of the reshaping, the reordering of
Mhm.
global trade, it's tied to that transition in the monetary franchise, right? And what it's saying is that old dollar that's breaking down, it's moving towards the new. When you actually look at it this way, so I was driving my kids to soccer yesterday, and like driving by, this is in Seattle, and I would bet this is the case in pretty much every big city in the country. I see these signs on like restaurants, small shops, etc. They say no cash accepted here. What they're actually saying when you see that, think about these $2 right now. They're in the process where they're both circulating at the same time. What's happening is like the private market is saying that old liability dollar, that Federal Reserve note, which is reserved by nothing, just the legal tender dollar, they're saying we don't want that anymore. What they actually want people to pay with is on their phones, these apps, electronic
Mhm.
dollars. And then where that is going, that's part of that transition from this old dollar circulating towards the other. What do I mean by that? So bring this up. I wrote a Substack post on this just to try to put concrete, thoughts or things for people to
Mhm.
latch onto from the past to understand what's going on in this dollar transition. As two $2 enter the ring, only there's only
Yeah.
one Highlander, right?
Yeah.
Only
Right.
one's going to survive the cage match. Go back to the 1960s. Talked about the silver certificates. Um, at the same time, you had these silver certificates. You had the Federal Reserve start issuing the bills that we put in our wallets today, and talk about it like they're becoming less and less problem. Like they're on their way down now. But back in the 1960s, they were on their ascent, right? And
Mhm.
these were dollar bills that instead of staying redeemable at the U.S. Treasury, for silver on demand, they say this basically like this is redeemable for nothing.
Mhm.
And get rid of that obligation clause, and then they say this note is legal tender for all debts,
All
public and
debts paid.
private, which just means that dollar is only good for satisfying debt, like you satisfy a credit liability. All right, I talk about this transfer. When you switch $2, right? What's actually happening is there's a transfer of purchasing power that's up for grabs.
Hmm.
Um, and let's say there's 100 units of purchasing power before. Afterwards, let's say there's going to be 110. Those extra 10 are going to go to the people or the market who adopt the stronger dollar. So what do I mean by this? This is in one of the books I mentioned last time, Silver by Silver. But once you get into this competition, $2 circulating, um, speculators will come in and they'll capture that value that's being
Hmm.
transferred. So there's a guy, one figure, history is best told and understood by like understanding the colorful figures helps a lot in my opinion. So this guy, Henry Jarecki, he's a European physician. He's just a guy who is like market savvy, realizes at a young age like how to make a buck by buying low and selling high. So he cut his teeth. I want to say he bought like cans of, I want to say like Nestle coffee or cocoa powder, something like that. He realized by buying those in, I want to say Switzerland on his ski trips, once he went back to, I think it was Germany, I might have all the details wrong, but he realized, oh, I could put these things in my suitcase, load them up, and it was basically like buy them for 5 over in Switzerland, sell them for 10 on my way back. And he's just like, oh man, I'm going to go on a lot more ski trips. is what he decided. And he's eventually, like, as he's going through his medical career, he's doing this and realizing how to, like, this is finance at the end of the day. You can make money technically or accrue purchasing power by trying to go long things like equities, like S&P 500, or buy the SpaceX IPO and ride price, or what the industry is actually trying to do is derive profit by being a middleman. Don't put any capital at risk. All right.
Hmm.
So what he realizes as he comes to the United States, I think he's there. He winds up in New York, some way or the other, and he realizes what's going on with silver, with these $2. And so he realizes, oh, while this redeemability window is open, I can place ads across all the newspapers in the United States, tell people I'll buy their treasury certificates for, I don't know, like a slight premium, $1.05, $1.10, whatever.
Right.
So he posts his bid. It's above the dollar face value, and people respond to incentives. In the normal economy, like these two things look the same. People are just trading these dollars at par, right? They're
Right.
like, nobody's going to spend their time doing the things that, when I say nobody, like most people are just going to go along and keep living life, right?
Right.
They want to go to their 9 to 5, go to their kid's soccer game, end of story. But when they see this, newspaper ad, oh, I'll take all your silver certificates off your hand. Give me $100, I'll give you 110, something like that. Okay. They
Hmm.
send them in. They beat him. So he racks up a ton of these bills, goes, redeems them at the silver window. And then what you can do is you can hold, like this is like 1960s, right? That redeemable window goes through 1968. If you then convert into silver, all right, what's going on in metal from 1968 to like 1981? It just goes on this crazy bull run, and then you see on the other end of that, who is the person getting long silver? And I think the most famous figure from that era that everybody should know in the popular lexicon is Bunker Hunt. This is related
Hmm.
to the family from like the brothers. They go through down different lineages,
Hmm.
distant in the family tree at this point, but the family that owns the Kansas City Chiefs, active in the NFL, that brother kind of kept his head down, didn't get involved in the silver speculation of the 60s and 70s. So they still have their wealth, but two of the brothers, and notably Bunker, started just bidding up silver because what was happening is you're breaking that dollar peg to silver
Hmm.
was breaking. All right. And so you start from like a constitutional weight of silver, or dollar price of silver. We're going to fix this to, I think it amounts to like basically a dollar 30 per ounce. It was
Hmm.
like $1 in the coinage was like 0.773 whatever ounces. It's a fixed weight. All right. What happens as that breaks and everybody, the sharp minds realize what was going on. They go in, they convert the arbitrage. It's very easy to see this one because you're going from an asset dollar to a liability dollar. But effectively what they do, all right, they just convert those dollars into silver, and then silver prices going up, they're going to capture that value from the peg breaking. There's a limited amount of money to be made on that trade. And you think about it, there were only $2.4 billion in silver certificates outstanding, like at peak in the 1950s.
Right.
And it's down from there. Once it's closed, there's no more that can be redeemed. So you get 2.4 times, $1. There's only $2.4 billion nominally. And that, what happens though is by converting to the metal, right? And the price of silver runs up over 15 years to 50 into the blow off top, and then it collapses on Bunker Hunt getting squeezed out. He loses all, he was the richest man in the world at one point. Talk about riding the bubble and then like losing it all. But when silver runs from like that fixed number, that fixed peg at $1.30 an ounce to $50 an ounce, that delta times the 2.4 billion, that's your amount of value that's been moved. Because 2.4 billion like silver certificates times, just call it $50, that's as much profit as there is in the trade, just assuming everybody converted and then they sold at the top, which isn't what actually happens. So like the most that could be in the trade is that amount. So what it effectively amounts to, so pre 1968 and 1971, where we break those metals pegs on the dollar, both in silver and gold, there was like $1.3 trillion in total credit in the US economy. What happens then after that is we're going to expand credit, right? It just goes up, and you zoom out on the chart, you go to the Fed economic database, look up TCMDO, total credit market debt outstanding. It just goes exponential. What happens there is you're converting, like on the peg, you're converting into silver. And then if you sell the silver, capture the arbitrage in dollars, right? That expansion from, let's say the money supply started at 1.3 trillion, and then you sell all of that silver from $1.30 to 50 times 2.4 billion ounces, you're gonna like that adds up to like 10% of the total dollar claim. So what you're actually capturing there, the purchasing power contained within the domestic financial system of the United States was debased by 10%. And you say, who captured it? Well, it starts with the speculators, right?
Right.
Yeah. So that's what I'm talking about when you shift from $1 to another, as these dollars are competing, some of the value is just going to be bled off.
Yeah.
And then the existing holders of the dollar who weren't wise to this, it's like, well, you just took a 10% debasement. And then as the credit stack grows, it's going to keep debasing after that.
Yeah.
So
and
same thing going on right now. Yeah, go ahead.
Yeah, no, and we're gonna wind up, and we're in the process of that happening now. And I saw this coming, 22, 23 years ago. I started buying silver at $4 an ounce. Right now, I'm a retard. I don't have any money, so I sack of 20 here, 20 there, 20, blah, blah, blah. I don't have a lot of silver compared to some people, but I have what I have, and I have an average price on it of like, I don't know, $8, $6, something like that, right? And now I'm looking at silver at 75, going, oh well, by the time this is all said and done, I'm going to pay for my house with it, right? That's what I'm going to wind up doing with it. But I could have put that money in something else, and the S&P 500, for example, and gotten my 12% a year with dividend reinvestment and everything else, and maybe I could have outperformed that. I don't know, I'm not sure. But what's important to understand is that it's part of your investment strategy. It's a part of the way you should be looking at your entire life, which is that a dollar spent today. If you can spend $1 today on something that's worth 90 cents and hold on to it until it's worth $1.10, and then get $1.10 value out of it, you're capturing purchasing power. So this is why, it's there's an old book called The Alpha Strategy. People ask me all the time, like, what book should you read, or what investment strategies do you do you live by? And I'm like, well, it's the old alpha strategy, which is that you buy shit that you use on sale, right? I mean, the average woman who ran her household understood this basic idea. Is like, well, whatever's on sale at the grocery store is the food I'm going to buy. Right? And when toilet paper's on sale, I buy a lot of toilet paper. And then I don't need toilet paper when there's a shortage of toilet paper or when inflation raises the price of toilet paper. Constantly living on a kind of Keiretsu, just in time for your household. I mean, I'm not saying you should, go fill a Quonset hut full of fucking toilet paper, but every time you buy six rolls of 6 bog rolls, 20% under what you're supposed to pay, then if you capture that purchasing power and do something with it, you're gonna compound. That's how you really compound wealth when you're an average middle class person trying to figure out how to capture value in this regularly inflationary environment. There are going to be times at all times when things are on sale and not like, I'm just looking at, like, we're sitting here doing this morning and I'm like, well, on Friday, somebody really needed the price of gold to be $4,600 an ounce, right? Into the month end for whatever reason. And today it's $4,500 an ounce. Well, maybe now that we've rolled over into June and you know anything about how the gold market is structured or the Bitcoin market is structured or whatever, you realize, I have opportunities here where I can eke out little bits of value and put collateral assets, which are going higher because of what we just talked about, everything we've talked about, where we're going to expand the money supply and we're going to grow the asset side of the balance sheet. Well, what's on the asset side of the balance sheet, folks? It's all the hard assets that we use to capture savings, right? And we use the asset side of the balance sheet as a mixture of savings and then savings deployed into productive capacity. So it's basically 3 things you have to fight all the time. How much do you save? What's the marginal utility of saving more? And then some of it has to be invested in order to try and beat inflation. Some of it, your savings should beat inflation. Do you save in dollars? Well, not if you can't get if you can't get a better rate of growth versus the rate of monetary degradation. So you play all those things off of each other in the long run, so that when you go through a cycle peak, you're going to make a shitload of money. You're going to preserve, not only preserve purchasing power, but actually expand some of that purchasing power, because during the era when they were biasing you into having to spend as much money as possible in this old liability dollar system, if you stack commodities, you're going to make it up on the back end. Then the only question then you have on all of this is, what's your real compounded rate of return? That's the big one. And you should always think in terms of all of these things at all times. So, that's when what you do with your dollar every day is in the dollars you make. That's the way you should be looking at them. I just find it funny. It was this morning. You think about this stuff, and I get really geeky about this shit, because I've done a lot of homesteading in my life. I've done a lot of all this stuff, and it's funny. I always do this. For years because my wife always gardens, right? For example, and I'm like, well, I make a pot of coffee in the morning, and I take the coffee grounds. Do I throw the coffee grounds in the garbage? No. I take the coffee grounds, I stick them in a bowl on my countertop, and every couple of days the bowl fills up with coffee grounds, and I take them and I throw them outside, because they're going to compost. I'm going to plant sweet potatoes in those things. Those sweet potatoes I don't have to go to the store to buy at retail. And it doesn't sound like a lot, but this is actually how we compound growth. And the reality is that most people, and really as a society, we're only about 2%, maybe 2% real growth in the economy on an annualized basis. That real wealth only, Rule 72 only really compounds and doubles every 36 years. Maybe a little, depending on, we used to be 1%, now it's between maybe 2.5%. Maybe eventually with other efficiencies and technology, we'll get to 3% or 3.5%. And it is that small amount of real wealth generation that class, that speculative class, that middleman class, they want to capture that. Okay, they want to capture as much of that as possible and leave as little for you to compound on an annualized basis. And that's what they're stealing through taxes. That's what they're stealing through regulation. That's what they're stealing through inflation. And it's all just kind of we talk about all these things, but at the end of the day, that's really all it is. It's a couple of percentage points, and in real terms, because everything beyond that is, for all intents and purposes, is inflation.
That sounds tiny, and when you tell it to people that way, 2%.
Right.
But if you think about it, big picture, 72 over 30, like it's 72 over 2, double every 36 years in real terms. Like, whoa,
Right.
that means every 2 generations between yourself and your grandfather and then yourself and your grandkids.
Yeah.
You'll see a 4Xing over a normal lifespan. It's like, that's
Right.
actually fantastic.
That's amazing when you stop to think about it. If you lived in, if your grandfather was able to build you a house made out of bricks that was 1,500 square feet, what that means is that you're gonna, if you take all of your wealth, you put it into a house that's going to be 7,200 square feet. Now, just think of it in concrete terms like that. Obviously, you're not going to take all of that wealth generation and put it into building a bigger house. Obviously, you're going to take it and put it into other things, and that make your life easier and make your life better. And we as humans have the ability to do this. And if we do nothing but constantly have to consume the wealth that we're generating because someone else is grabbing it, I got news for you. When you're the oligarch class and you can skim a point off of 7 billion people, you're skimming an awful lot of fucking wealth, and you're sticking it in a hole in the ground somewhere. And then what is your goal? Your goal is to collapse that system, collapse them, kill a bunch of them off, and then come out the other side of it, walk out of the hole, take all that capital out of the hole, pay all the debt's all been reduced down to zero, and now you have all the assets with which to rebuild society, and you get to stay in power. That's the way they think. That's what they're doing. So I don't discount some of these weird stories of what do we really want in Iran? It's not the nuclear pile. It's the fact that there's a big pile of fucking gold and silver underneath Karg Island. It's a metaphor, folks, for what they've actually done. There's literally vaults full of silver, gold, all of it somewhere. And they've stolen it all. It's not in their castles. They're living in the same shit. They're living in the same places they lived in 200 years ago, these families. So now you got, So where is it? You know what I mean? And they're financing their yachts on cash flow. And this is where, the conversations that I've had with the Amber Burlingame on this podcast and others comes into it. That's the way they think. That's what they're doing. And what we should be doing is going, oh, why don't we do that? And every time we see one of these dumb rules that they want to put in place that suck a little bit more of our time away from us, that take because they're stealing our time. They're not stealing our money. They're stealing our ability to generate wealth. And we only have a finite amount of time. Because at the end of the day, the planet has a ton of fucking resources. And by the way, that pile is ever growing because we keep digging more out of the ground. And the copper that we dug out of the ground 300 years ago, got news for you, it's still copper. Last I checked, it's still copper. It just may be in a landfill, right? Not in a hole in the ground, but we dug it up out of the fucking ground. It's still there. We can go get that copper, reclaim it, reuse it, do something with it, and be productive with it. Matters, and what's the only scarce natural resource in the world? Your time. That's it. That's why the law of diminishing marginal utility is the only thing you have to really get into your head. That's why all Malthusian arguments are stupid and dumb. Every goddamn one of them. And whenever you fall for a Malthusian argument, go look at the person who promulgated that Malthusian argument and realize that guy wants to oppress you. That's what this is about.
What was the first one you said? The marginal.
The law of diminishing marginal utility is. I only believe in two.
What is that?
I'll explain both of these. One is the law of supply and demand. We all understand supply and demand. That's how we set prices. The law of diminishing marginal utility is very simple. For every unit of a thing that you acquire, you need the next unit a little less. I use a simple argument, the simplest argument. You're a man dying of thirst in the desert. That first drop of water you get, oh my God, you'll pay anything for it. That second drop of water, you'll probably pay almost as much. The minute you get to the point where you're hydrated, are you willing to bid up that price of water to the same level? No, you're not. There's a point also where you get too much water and you drown. Right. So there's a peak, there's a function, and then there's a steady state where you're willing to pay X amount of money or X amount of time to get X amount of water that you need to live your life. Okay. That's the law of diminishing marginal utility. This is why no argument that says, oh, well, we have this amount of debt today and we keep adding that debt tomorrow into the future, and we're going to go from $40 trillion in debt to 120 because we're adding 1.7 billion and 1.7 trillion a year. No, we're not. Because at some point, the debt pile becomes too high for us to service, and we stop going into debt, or we change the political system, which at some point everything breaks off to that asymptote, the way Matt was describing it earlier. Okay, everything breaks off to a point, and then that's why there are cycles to history, and not just and then collapse.
This is
right?
where you talk about the electorate.
Sorry, it's like the meme about the entrepreneurs. They're like, my baby, he was a pound when he was born. Now he's 2 pounds. At this rate, I'm proud to say that at age 10, he'll be 7 trillion tons. And it's like
exactly. Like, so it is exactly that. That's Malthus's argument. Remember, Thomas Malthus was the moron who said, and I mean this sincerely, who said, well, the food supply, grows linearly and the population expands geometrically, so therefore there has to be famine. No, what happens is we keep growing food, and then we stop growing, and then we stop having babies when we reach the productive capacity of how much food we can produce, because people stop having babies, right? But if you look at the way our political discussions are always framed, they're always framed with some embedded Malthusian horseshit, right? And every time, and it's what Dexter White likes to call it, to push the slider to the right on an Excel model that you have on a spreadsheet, where you have one input variable and it's working. You have a relationship between two variables, and then you have a little slider to then model it, and it goes whee, and you just push it all the way to the right, and look, a collapse, a catastrophe happens. But it never works that way. Why does it never work that way? Why is if this were the case, like the peak oil guys do this, the peak energy guys do this, everybody does it, and they do it because it sells newsletters, because catastrophism sells, right? And it sells political campaigns, it sells everything. It's whole horseshit. Again, it goes back to everything that Matt said earlier about the Mississippi Bubble Company. Like we've got this nigh infinite plot of land, and we're going to go from this amount of productive capacity to this, and then you engage people's imagination. This is how you get bubbles. Mm-hmm. Well, it's the same thing on the catastrophe side of the equation. Well, if we keep doing this horrible thing forever, we're all going to die. Well, it never works that way. The only time we're all going to freaking die is when the sun burps and wipes out fucking humanity, which happens about every 12,000 years, give or take, right? And that's beyond our control. And even that's cyclic. So there are cycles to everything. And the way all of this works, and it's human behavior is very, very cyclic, because we respond to incentives. And we say, well, I have enough savings. Now I want, this is why, when people say to me, I'm in this, right? And then people say, how much gold should I have? I say, I don't know. How much should you save? Right? And what I usually say is have some amount of savings equal to about 1 to 2 years worth of your normal annual expenses, where if you lost your job tomorrow, you could live on your savings for upwards of 1 year to 2 years so that you can find a comparable replacement. After that, your capital should go into investment, where you can get a positive rate of return on your savings. Your savings is there to protect you from inflation if you've saved in the right assets. So should I have gold? Should I have silver? Should I have Bitcoin? Should I have dollars? You should have a bit of all of them. I don't know. How much should you have? Right? And the amount you allocate to any of those things in your savings pile, gold, as opposed to goats, which is your industry, as opposed to guns, which is your defense, right? This is the way you should be structuring your entire life. This is why the whole thing is not just it's not just a cool triptych and bit of alliteration. It's a real thing. Savings, investment, defense, right? Gold, goats, guns. Pick, beer, guns, and pussy. It's the same goddamn thing, right? Like at the end of the day. And this is when you're living through times like this, there are massive arbitrage opportunities because most people don't understand what's happening. What we're trying to do is explain to people what's happening so that you can then go, you know what? Don't need the G.I. Joe with the Kung Fu grip this year. I'm going to buy my kid a bow for Christmas instead, right? And teach him how to, shoot an arrow because maybe he can kill a deer with it at some point in the future. Or I'm going to teach him a life skill, or I'm going to get him something that can teach him a life skill. We used to buy our kids Tonka trucks, right? So that they could go and like move, think symbolically. When I was a kid, it was either do I get another Tonka truck or did I get the G.I. Joe with the Kung Fu grip? My parents kept buying me new Tonka toys, and they bought me Lego sets, right, and stuff like that. So, that's it's a shift in mindset and a shift and we're in a world today where there's a great opportunity because all of these collateral assets, these commodity assets, these collateral assets are going to need to be repriced versus the amount of dollars flowing around the system. And what I've been saying for years and years and years, and we never talk about it on this podcast with you, Tom, because we're always talking about other things. But one of the things that I've always said is we made a mistake, and that mistake was foisted upon us by, again, I would say nefarious forces, where we asked the dollar to be all three aspects of money: store of value, medium of exchange, unit of account. But it's a credit liability dollar. How can the credit liability dollar be a form of store of value if it's a debt instrument? In order for dollars to come into existence, someone else has to go into debt. It's a zero-sum game. So no, I have no problem with the dollar being a medium of exchange. I have no problem with it being a unit of account. But I do have a problem with it being a store of value if it's not commodity based. Because if it's not commodity based, it's not collateral based. If it's not collateral based, it can't perform all three of these things simultaneously. See, gold today is a store of value, but it's a terrible medium of exchange, and it's not used as a medium. It's not used as a unit of account at all. Gold is not money. Gold is savings. And everybody goes out there and says, "Well, gold is money." No, it's not. Gold is savings. The dollar is a currency, medium of exchange, and it's also the unit of account because global trade is all dominated in dollars because of all the shit we've talked about, the euro dollar system, all that stuff. The definition of what that dollar is going to be in the future is going to be, it's going to collapse. And we may get back to, if we get back to a commodity money, and we can have a commodity money that's portable, can be a good medium of exchange. That's why the gold standard failed, folks. Gold standard didn't fail because there wasn't enough gold in the world. The gold standard failed because it was a bad medium of exchange in a world where our time preference to settle trades was happening faster than we could move gold around. And there wasn't enough resolution, and we were creating so much wealth, there wasn't enough resolution to compare to both sides of the trade. Like, I can't divide this gold enough physically in order to buy a screw or buy a hammer or buy whatever it was. I couldn't do it. So we had to create something else. That's why there's nothing wrong with credit dollars. There's nothing wrong with them. You just have to understand that as long as there aren't multiple claims of credit to the same dollar, that's when we get into trouble. And, the monetary system has to expand in order to deal with the resolution of the demand for money. And in order for people to get what they need. And what I've been saying, what we've been talking about since Trump went to war with Iran is what people care about right now. What matters now is not the price of oil, is whether or not you can actually get a barrel of it. That's more important to everybody. That's the law of diminishing marginal utility. That's the starving man in the desert, or the man dying of thirst in the desert. That's what we're dealing with right now. And that's an opportunity. Because what it's doing is it's saying, oh, by the way, the old way we used to move oil around the world, to move energy around the world, we're changing that. we're taking away the choke points that gave certain people the ability to pull a vig off of moving oil around the world, and we're moving it somewhere else. As a matter of fact, what we're trying to do is they were capturing, this amount of the vig. We want them capturing this amount of the vig, because when that happens, you get to be more profitable.
So I can give people an
And
example
and you
here.
get you get to capture more of that wealth and then use it productively and use your time more productively. That's the buy-in system. That's methodologically, that's the way I think about all of this stuff. So go ahead. No, I'm sorry.
I was just going to say to give people something to attach onto, because until it's like made concrete, it's hard, I think, to understand.
It is.
And that idea of the dollar transition with Henry Jarecki, say there's 90 billion, $100 billion in nominal, profits to be made.
Right.
Switching from a silver dollar to a credit dollar. That one's easy to see because you can see the silver being redeemed, you can see it sold. Now we're going from a pure liability dollar to an asset, stablecoin dollar, but you're like, well, the asset is this T-bill IOU. So you're like, what the heck's going on? All right, I'm going to narrow in like where we're headed for what I see as like the next key battlefront right now. Like, I think it's Japan. You're looking at their own sovereign debt crisis. You're looking at their own currency crisis. It all derives from the fact that, Japanese people are insanely industrious, very what's the right word? Like they're an engineering culture, very productive, all that. But what they don't have is energy resources and commodities, right? At one point, if you go back and read some, there's a good novel about this. The what's it called? The Asian Saga. I'll find the author there. Show notes. It's a great book that goes. It's a fictional story, but it goes through like their money was actually like pots of rice or like bushels of rice.
Yes.
And that was their quoted currency and how they'd pay their samurai, all this stuff. All right, so it's food. Food is the commodity because that's the scarce resource. What they don't have in the 19th century and beyond is energy, access to oil. They have no oil resources in the four main islands, as far as I know. So everything they get, they have to go to the international markets to go bid oil. So think about these tankers leaving the Persian Gulf. Someone in Tokyo, Namura, MUFG, whatever industry is saying bid. I want to buy that oil. Bank, I need you to settle it. They go to their bank. It's like, all right, the currency of the realm in Japan is Japanese yen. It's not good for any oil. No one will take it as money good. What they need is dollars. And it's like, does the world do it because some organized plot by child eating leads, or because it's an economic standard, it's an open protocol that we've been building up on since the 1500s, this entire exploration of the new world. I'd say there's something deeper there. Like the world wants dollars, not because of some intelligence community cutouts or what they're doing. It's like we want dollars because like what it comes down to, it's the new world economy, and that growth engine is kind of what we're tapping into, and it's open trade. All right. So rest of the world, we're not going to take Japanese yen. You got to pay in dollars, and the existing system, you got to sell the Japanese yen, a fiat, credit currency. Got to go to the FX markets, pay the bid ask. All these money center banks, they're going to make money. In the token of the realm, the British pound, for translating the currency from one to the other, and then the energy producer picks up the credit dollar that they want, ultimately what they're after, and then the Japanese bank or the Japanese importer can get the energy resources, and the Japanese economy can produce, lever up production, like real production off of that barrel of oil. All right. So in that old framework, you have to go through two hops with this offshore dollar. The thing everybody is actually after as the dollar, they want to get closer and closer in a credit-based framework. You want to get to the highest quality, most liquid credit claim you can get. So if you can't get your U.S. banking franchise where you can settle at the Fed, with the rest of the banks, the next best thing is the Treasury bill, right? So what's happening here, instead of on this old offshore dollar, the liability dollar, possibly as much as 350 trillion nominal units outstanding in terms of the debt that's been created here. Now you go through just like one hop where, okay, starting June 1, literally today, opening day of business as we're recording, Japanese, like their FSA, their Financial Services Authority, gave the regulatory approval for their banking system, their domestic banks, to now settle in these dollar stable coins as
Hmm.
payment services. Now they have to meet some criteria. It has to be a foreign issued trust. They're going to check the boxes here to make sure everything's ready to go and make sure that these dollar claims are defensible. They'll hold 100 cents on the dollar is what you're after. But what's going to happen? So June 1, all right, they're starting to integrate on top of this stablecoin dollar market, which is
Hmm.
maybe 300 billion, 500 billion in terms of, total dollar money flows. One system, the old system is up here, the new system is down here, but like over time, this is coming up,
Hmm.
this is coming down. And so Japan importing, and they're becoming tighter linked with this bilateral trade. So you think about those trading pairs, Mexico, China,
Yep.
Canada,
Hmm.
like integrating with the US, what are they going to do for their energy imports? Well, we just showed Persian Gulf is unreliable. If the US isn't
Hmm.
there to give the ship captains that pat on the back that they need. Like, come on, buddy, you can do it. You can cross the
Hmm.
strait. You can do it.
That's right.
Like, they're not going to get the oil there. Versus, hey,
That's right.
buy U.S. oil from Alaska. Buy what we're producing
Hmm.
out of Gulf of America, or
That's right.
buy Venezuelan oil. Now you can the Panama Canal. After Jimmy Carter gave it up, it's going to come back into American
Hmm.
protection. And those ships, from Venezuela, Guyana, all this offshore development and the works. Hey, that can get to Japan, and now Japan to get your energy imports you need. Now you don't have to pay your dollars and sacrifice the VIG, as Tom was talking about, like pay up here. Well, now we can shrink that over here, and then as this asset dollar grows and the old one declines, that value is then shifting over. So
Yes.
what you're going to see is the purchasing power of $1. It's going to flow to the other. Now, if you think about that Henry Jarecki, the silver edition, I said $90 billion, 100 billion, something like that was the amount of nominal profits to be arbitraged away. If you think about that value transfer and what's taking place, it's like, all right, it's all fuzzy, calculations, but you're
Right.
starting from $350 trillion in credit claims.
That's right.
It's going to shrink, and then this other asset base is
Hmm.
coming over here, and then the actual value on the other side of it, because all of that value shrink, that's going to be captured by the financial industry. It'll be the bank, so it'll be if you're thinking about it's just equities here. Some banks are going to win from this, some are going to lose.
Yeah.
Some
Yes.
exchanges will win from this as they see more trade of the underlying commodities
Mhm.
and settlement versus, some will lose. And then after the fact, I think the big value capture would be on the other side of this, whatever's in the repeg. But just where this has gone, we've spent, I don't know, since the 1960s. We're like 60 years in of like ramping up that offshore dollar bubble. We're past that point on the S curve where that second derivative has flipped from positive on the way up and then it's turning on the other side. Um, but I think this transfer in terms of where the purchasing power is going to move will be. I think it has the chance to be bigger than what we saw in the 60s and
Oh,
70s.
without a doubt. And
So then,
I'm gonna.
yeah,
Okay, I have a couple of things I want to say about this. This is why
yeah,
Japan has been my focal point for the downstream effect of moving away from LIBOR to SOFR, and why the why they had to bait Russia into a war in Ukraine in 2022, because the goal here is to stop Japan from buying Russian oil and settling it in something, and settling the arbitrage in something other than British pounds. Because if the Japanese are still at war with Russia, they've never signed a peace treaty over to ending World War II. This is important. This is what I mean. This is important. When that happens, then Russia and Japan can trade directly, cutting the British Hong Kong middlemen out and the Tokyo middlemen out of the system. And Russia gets to sell oil directly to Japan. They can transacted all in US dollar stable coins. Japan is the key here, because Japan was used as the piggy bank to lever up the entire offshore dollar system through its productive capacity in the Japanese yen. That's why Japan was the last of the major G7 central banks, the Bank of Japan, to get off the negative or the zero bound. And the minute they said, we're going to start changing, we're going to start allowing the long end of our yield curve to go up, I went, oh, bingo, just about. I mean, when Kuroda stepped down at the Bank of Japan, I don't know if you were following me back then, Matt, but when Kuroda changed the band on the 10-year Japanese government bond from 0.1 to 0.2%, I'm like, and then he stepped down, and his vice chair at the Bank of Japan did not take the job, even though this is Japan, seniority-based society. It should have been his turn, and he stepped down, and he stepped aside, and Ueda took over. I'm like, what's going on here? And I'm like, what's happening here is that Japan was beginning to walk away from the old system of being the piggy bank for the offshore dollar system in Southeast in that area of the world. It was a very early leading indicator that SOFR was driving, that everything was coming, that SOFR was driving all of this. And that I made the call then. I said, Japan is going to normalize interest rates. They have to, because inflation, post-COVID inflation is rising. They have to let the long end of the yield curve rise, and they have to entice all that capital to come back that was offshore, that had been driven offshore by years of zero bound and negative interest rates. They had to drive that back. And Mrs. Watanabe, the metaphoric Japanese investor, there's something else that Matt forgot to mention about Japanese. They're not just industrious, they're also incredibly nationalistic, and they would rather invest in Japan than anywhere else. And as long as they could get they get 5 basis points above inflation, they would put the money into Japan. Moreover, the Bank of Japan didn't just buy its own debt, it also bought the Nikkei. So the Bank of Japan has a portfolio of stocks and bonds to manage the rise of the long end of the yield curve. And this is why everybody has been fucking unbelievably wrong about the blow up of the Japanese yen carry trade not blowing the world up. I remember getting a text from a friend of mine going, why did the world not blow up when the Japanese yen, when the carry trade blew up? I'm like, maybe because it was always a British fucking bedtime story. Maybe it was all bullshit. Maybe because the Bank of Japan always had more tools in the toolbox than anybody that would tell you on Bloomberg or the Financial Times or the Wall Street Journal would tell you. Maybe, just maybe, Japan's got help to get out of this, and they're actually the ones driving the new dollar system, because they're getting out from underneath the years of all of this. Look, dudes, when this started, the Nikkei was trading at 23 grand. The Nikkei is trading at 66,000 today, 68,000, some retarded number. So the Bank of Japan has made 3x on their money, and they're literally selling Japanese stocks into the market to stabilize, to manage the yen with 400, 500% returns on their buying from the 2010s. You want to talk about a well-capitalized central bank. So they can allow the long end of the yield curve to rise and lose money on their bond portfolio because they can make it up on the back end with their equity portfolio, and they're able to manage all this. And when Takaishi, the new Japanese prime minister, took over on my birthday in February 8th of this year, the first place she went was the White House. Made a deal with Trump, like literally she had a meeting with the White House. Now, first thing she did was say, yes, I am going to cut a trade deal with the United States. I'm going to buy a shit ton of American energy. Why wouldn't she? WTI is trading at a discount to Brent. They no longer have to buy. They have to buy off the AP Tapas board or wherever. Like, Japan is sitting in the driver's seat because Japan pledged itself to the changeover to the monetary system of the new monetary system of the United States, which started with the implementation of SOFR in 2022. And it was Jerome Powell that started driving that. And Powell's now gone, and now Warsh is taking over, and we're going to develop the energy assets coming out of Alaska and Japan. If we can get this is why Iran is important, because if you get Iran taken care of, then Ukraine collapses. Then the Ukrainian war collapses. It's why you're watching the Russians push hard on Ukraine right now. This is the right time for them to do so, because at some point that war has to end so that Takaishi and Putin can end World War II, and the Japanese can finally open up proper trade with the Russians. The Russians have doubled, if not tripled, the amount of oil that they're sending east as opposed to west, out of not just through the Arctic Sea route, LNG and other stuff through the Arctic Sea route, but the Espo pipeline in Kazmina on the Kamchatka Peninsula now produces 1.7 million barrels a day, and sending that out around the region, both to China, to the Indians, to Japan, and others. And it's not like the Russians can't build another oil pipeline, right? And so this is why Japan is, when I talk about ARC, America, Russia, China, I'm really talking about JARC, Japan, America, Russia, China, because Japan is the key on all of this as well, because the Japanese are there. That's why they're going to build our ships. That's why they're working with our defense departments, why all these things are happening, because that's where those credit dollars are going to flow. And guess who gets cut out of all of this? As Matt pointed out, the liquidity token, the old liquidity token of global Forex was the British pound. The only reason the British pound trades at $1.35 to the dollar is because it still settles or has settled up to at least until recently, 30% of global Forex. Take the Japanese energy trade out of that system, and Matt just said some banks are going to win and some banks are going to lose. Well, I got news for you. JP Morgan is going to win. Nomura is going to win. Blah, blah, blah. The Japanese banks are going to win. The American banks are going to win. Standard Chartered, Barclays, and all the rest of them are going to get their asses handed to them. And the currency you should really be watching at this point then is the Hong Kong dollar. But
so
that's
interesting news story yesterday I saw.
Sure.
Talked about the JARC, Japan and China being a key. They've been at war. They just kind of fight each other a lot over the years. The key wedge issue, obviously, Taiwan, Formosa. You saw Hegseth. It was like Saturday or Sunday. He literally gave a directive. The U.S. allies, military allies, don't talk about Taiwan. It's just stop. The only thing that can do here is mess things up. And so I think that's your canary trap as you listen to the voices in the next, days, weeks, months, trying to fan the flames on the Taiwan situation. That's going to be the tell of, who are the Benedict Arnolds within your ranks, and also who's losing,
and who's losing, because what you'll see is the classic British and European media outlets constantly try and bring Taiwan back into the conversation, right? You'll watch Steve Bannon talk about how we're doing it all wrong. We have to confront China and go fucking shit in one hand and wish in the other and see which one filled up first. But as my dad used to say. This is the reality. And the Taiwan is being taken off the board as a potential choke point for remaking the world. Hormuz is being taken off the board. Hormuz replacement therapy, as Tommy so brilliantly put it one day. All these things are happening. Like the Gulf of America, why Cuba? We have to free the Straits of Florida. It's the only geographic choke point for the Gulf of America. It's important, and it's why we watched people fighting over Cuba for all this time. Why we had American traitors within our government and our oligarchy allow the Russians basically to maintain a presence in Cuba for all these years. Same thing. And again, let's really open up the conversation and talk about all the British offshore banking centers that are in the Caribbean.
Hmm.
You think the Caymans is long for this life? I don't. Like the British Virgin Islands? I don't. Like I did this. I know, Matt. I know you. I know since you're a subscriber, you know that when I know over the tick report, the March tick report, the TIC report, and I noted the egregious amount of backfilling of what the British Virgin the reporting of the British Virgin Islands. By the way, just to give you an idea of how much I fucking hate the British and how much I hate the people within, I guess it's the Treasury Department that are still covering for these people. So since the Trump administration came into place, the first thing they did was they started an audit of all of the old books. And one of the interesting things has been that people don't really talk about is that they forced a restatement of all the Treasury International Capital data time series going back, right? And so as a guy who's been, dutifully every month for the last 13 or 14 years, grabbing the tick report, putting the data into a spreadsheet, I have it all, right? I've been watching there's always little bits of restatement here and there from month to month. It was always coming out of Europe and the British offshore banks or British offshore havens like the Caymans and Bermuda and whatnot. Germany has been terrible about this over the years. So was Australia and others. But interestingly enough, when you go to the Treasury International Capital Report, and the most prominent link is the MFH table, which is the top 20 foreign central banks and their holdings, and then a statement about the total amount and everything. And that's the one everybody quotes. And no one, and because you assume no one would lie about that data, right? These are the top 20 banks or 25 or whatever the hell it is, right? And it's the Japan, China, this one, all the way to it's actually Japan, the Bank of England, China, the Caymans, Ireland. Those are the top 5, and then there's everybody else. Well, that list goes from about 1.12 trillion, which is what the Japanese hold, all the way down to the bottom is around 18 to 20 billion, right? So I used to use nothing but the MFH table, and then countries would fall on and off, and I'm like, it's a pain in the ass. I finally went to the big unorganized, grabastic, horrific web data dump that they do of every country in the world, even the ones that don't have any treasuries. Antigua, Ukraine, right? All of them, right? And I'm like going through it, and I'm trying to rebuild all this because I wanted to start breaking the tick report down by region. So starting in 2021, and I rebuilt the spreadsheet, and I'm going through the list, and I look. This is the British Virgin Islands, and the British Virgin Islands back then was $55 billion. I'm like, it's not on the MFH table. Why is it not on the public one that everybody that shows up in every, when the tick data comes out every month, there's a link to the MFH table in the press release and no other links. So that's where they're pointing everybody. But why is the British Virgin Islands not in that list? It's $55 billion. There's Vietnam. It's $17 billion. They're on the list, but why is the British Virgin Islands not? Oh. And then you realize, because they were telling everybody don't look over here. So steadily over the last 4 years, that number's risen from about $55 billion to $90 billion. Right? That's fine. Over the same course of time, the freaking Bank of England has bought $400 billion worth of treasuries to defend the pound. This month, I'm going through and I'm like, I always look back a couple of months just to make sure that they haven't egregiously restated anything, just to make sure that my data is as clean as possible. And I'm looking at the British Virgin Island data, and I see numbers flashing by, and I'm expecting to see 80, 85, 84, 80, 150. I'm like, what the fuck? And there's 6 months last year where the British Virgin Islands had bought $90 billion worth of treasuries one month and then bled them off and then sold them all 6 months later, but they never were in any previous friggin' tick report. I'm like, and that was from June to December of last year. Oh, that would be when we were fucking with the gold market, putting tariffs on and everything else. These people lie like a fucking rug about every goddamn thing. all day, every day. So fuck off, all you limey sons of bitches. We're going to kill you all. Every goddamn one of you. We have to. And this is, I get more and more data every day that they're just trying to obfuscate what's actually going on. The British pound is not long for this life. I'm telling you this. It has to be. It has to go away.
My bet, if you're looking at the Treasury Holdings data, it's probably being run off of some server, like SaaS server or something like that. That's spun up in the 1960s or 70s, and they're matching, every like in database management. You got dimensional tables, you got fact tables, and the fact table is like the metrics as they're coming through. Every T-bill auction, they would map. All right, which banks own what, and it's all the IOU is custodied at Federal Reserve Bank of New York, right? But then it's like, who does this map to? It's like, oh, then we got to join these two tables. And it's like that one is bank, King Charles III, blah blah blah, credit union, whatever. But what's going on in the background? All right, the dimensional tables, I just know this from analytics, tech, all of that background, working in analytics. It's like, all right, your fact table, that should not be restated over time. It's like, this is what happened. It is like, that's why it's a fact, right? It's like the metrics come in. We issued a $90 billion T-bill auction, this morning. It's like, that doesn't change. Like that's the ledger. But what can change is the dimensional table. And then in banking, what's happening all the time, they're always buying and selling each other, right? Someone's got a balance sheet hole. They need to be fire sale closed on, like Credit Suisse. Or it could be the other way around. One bank has a cash surplus. They're like, we got to do one of two things or a couple things. We can pay out a dividend to the shareholders. It's like, why do we want to do that? Then we can't grow in the future. So they might, but we don't want to, just dump a ton of cash, let it leave the door. Number two is they can start lending out more, create more, loans. But if they don't see the backdrop as like favorable, they're just, we don't like these rates where they are. We're not going to lend into this. So a lot of, bank managers in the US, I know that I talk to, they're actually pretty disciplined. Like this idea, like the 2008 guys, like the Mozilla from Countrywide, like those guys are schemers. Your typical U.S. commercial banking executive is actually, as you said, they're 353. They're pretty conservative. They probably wear whitey tighters, not boxers. That type of guy. Sorry, I mean just. There's any listening. I respect you. You're cool, but it's sorry to put you down and say you wear whitey tighties. But that like they're not. They're disciplined, is what I'm really saying.
Right.
All right. So the other thing is like buying banks at high prices. They're also, they might do it, but they don't like to. All right. Offshore, if you're dealing with this environment where we talked about the second derivative has changed from all right, money supply increasing at a faster rate to like, oh, it's still increasing, but it's slowing down. You start to see the writing on the wall, and that's where you get these failures. Number one, like this is what 2023 reflected, right? It's like we start this process. What happens? Your frontier banks doing the cuspious, edge of the frontier stuff in credit, lending, business development. Those were taken out like inside the United States for a reason, right? The Fed is coming out, every day now. They target them. But offshore, this is where you get like Credit Suisse. It's like, oh, that thing was a hole. Like Bill Huang was building this up. Like they sent him in there to, to create this problem. So you see this dismantling. Or bring this all home is all these offshore banks. They're just in this middle ground where it's like, oh God, this little cutout in the Caymans is we can't, like, we got so many deposits here, liabilities, people are hitting us up, and we don't have the liquidity. What do we do? It's like, oh, all right, we'll have this little bigger fish here in the BVI, we'll gobble you up. And that could be what's happening in the data here. But what it's actually reflecting, besides just like hide the, what's this 3-shell Monty game, just hide the insolvency. That's what's going on.
It's very possible, Matt. But but I've been looking at the TIC data for so many years. Like them restating by $10 or $12 million. Like the data's denominated in billions. So 55.347. But you see the, three. I don't get upset if it's 54.347 one month and then next month, the January day was actually 346 or 345 or three. I don't get upset about that. When I see an $80 billion thing show up, that has no, that's never happened.
So you're saying the total mapped up by 80
it was
bill.
like it went up. It was like 82, 83, 150, 149, and then back down to 80. Like it's usually, like the BVI data is really, really normal. And I'm telling you, 6 months, last month, that time series was normal. It was going up by a certain amount every month or up and down a little bit. And it was a normal series. But this was a big bulge that now showed up, and it showed up a year after all the major restatements. I had to go through and do where the whole tick report got, the data got restated for like 2 years back, and things were off by anywhere from $3 to $5 billion. It was a lot of money. So I had to literally go through 1 month and just go through and redo the entire data set, right? So I had the data I have the previous versions of my spreadsheet where I can show you the data. And then this month it showed up, and there was like, for this 6-month period last year, they were hiding an $80 billion bulge to their treasury holdings. And they held it, and they hid it for a year. And it finally showed up.
So on the supply side, then, Tommy, I don't know if this is interesting to the audience at all. They're like, this is.
I'm just.
I don't give a fuck what the audience thinks. I'm having fun. Keep going.
So, okay, cool.
Have you mirrored that up, like versus? So that's tick is like who owns it, which banking system,
right,
or which country maps to it. Have you matched that up with what we show on the record for the total amount outstanding? Like, all right, we have 230 treasury bonds. Like that number is X. Like it doesn't go up. The only reason it goes up is we placed more like treasury debt.
The problem is that the problem is that there's an other countries category, and that's about a $400 billion number. And at the end of the day, no, the total amounts didn't get restated, but who owned them changed. And it didn't show up in any of the ones. I don't map every country, but there's definitely a big slush. I'm telling you, at some point there's going to be another restatement somewhere else. I can smell this. Like I can smell it, and so it was just really weird.
Your checksums against the treasuries outstanding, like that.
I don't do that. I just look at the data, dude. I honestly look at the data. Well, but I didn't notice in the total. I didn't notice in the total data outstanding, the total number of treasuries outstanding, that was restated, right? Or total treasuries hold, that wasn't restated. So somewhere that number was either. Again, there's fudge factors in all of this because some of it is just put in other countries.
Okay. Yeah, I would.
So what they did was they moved it from one pile to the other. When BVI finally properly audited, or the balance was properly audited, and they were fighting the audit probably for a year, is what I'm getting at. That's what happened. So
all right, crazy stuff.
It is. I've never seen anything like it, so I just note it.
All right.
Like I've watched, restatements of anywhere from $3 to $5 billion. But look, when 1% or 1% change of the total, like if I see the Caymans, for example, restate by $4 or $5 billion, I don't get upset about it. Like it's 1%. But when you see double, like somebody's hiding $70 billion at the treasuries, and they're hiding it in the British Virgin Islands, and they're hiding it during this time period, I think it's important.
Mm-hmm.
You know what I mean? And again, why is the British Virgin Islands never show up in the MFH table? They don't want you to know that the British Virgin Islands is a massive offshore holder of U.S. treasuries. There's a reason for it. I don't have a good reason for it. I'm just noting the fact. And someone is hiding this data, and I don't know why they would hide that data, but I'm going to default to because London sucks. That's my answer. It's not particularly. It's not particularly deep, right? I've been watching. I watch this every month, and I'm like, the interplay since Mark Carney took over as Prime Minister of Canada between Canada and the Bank of England has been enormous, and there's been a lot of just shenanigans between Canada and all of the Commonwealth central banks, and it's in the tick data, and it's data that no one would ever look for. No one would care. Why would anybody? You have to be a singularly obsessed asshole like me to care about this stuff. And that's what it comes down to. And so I find it, and then eventually somebody's going to go, oh, by the way, I know why they did that because I was there when some bank blew up and blah 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 blah. I'm gonna get a DM from somebody one day. I talk about this stuff in public, not just to talk about, not just to like. I sometimes I do it because I know people watch these freaking things, and I'm hoping that somebody out there actually knows what's going on, because that's invariably what happens. I get a DM from somebody on Twitter or on, they sign up on Patreon to send me a DM, literally. And I'm like, okay, cool. You're awesome. Thank you. And then they give me some information, give me some background information on this stuff. This is how I find out a lot of these things.
Yeah.
But if I don't talk about it publicly, it never comes back. It never gets into the zeitgeist for anybody, for it to get back to the people who were there. And then someone will eventually, and I, of course, never, I'm not going to betray anybody's confidence or anything. This shit's always told to me in private. I'm like, okay, thank you. And I'll just throw it out there and let it propagate. But they wouldn't tell me if they didn't want me to know. So, salt it all to taste, folks, but the British suck. That's really what it comes down to. So I'm not sure we need to talk about anything else.
Yeah,
if you needed more reasons to hate the Bank of England, there you go.
We'll wrap it up and bring it home. I think, how do people, besides just going on, live your lives, when you're living through this process, 1960s, all that stuff, the big transition, I think about all right, this big wave that you're riding on is actually the key thing to get right. Over the long term, the 40 years of your life, that 2% real growth, where is it gonna flow to? And it's very difficult for the average person on the street to understand what's going on, but also just what do I do? And the key things are going to be those big decisions. So what I mean by that, family history. I had a grandpa who was a farmer, and then on the other side, that's my mom's dad. And then on my dad's side, also his grandpa was a farmer, and they both bought their farms within a 10-minute drive of each other, in central Missouri. So the prospects they're in the same line of business. Just one bought in 1929 before the October crash on credit. One bought in 1965 or something. And that backdrop, and it's outside of your control. They both worked their butts off, but one was the one in 1965 bought the farm for whatever price. All right, interest rates were rising. So as he's chipping away, and then commodity prices were rising as well in the 60s and 70s. So he was able to pay off that debt very quickly because he had an extra tailwind. And then he's buying stuff all right, man, after 1971, I can buy gold again. And he's like, oh, gold is savings. Oh, sure. Yeah. So it's just wow, life is great. I'm a genius. Meanwhile, the guy in 1929, less than a month later, he buys it on credit, all right, or whatever, you put 10-20% down, whatever the deal is, buys it on credit. Within a year, we're in the Great Depression, and this guy, he just worked his butt off to make sure his name was still good. He went his whole life just all of his marginal product is just going off to make sure he doesn't default on this loan. It's just crazy, to think the same guy essentially is living their life, and one of them is walking up Mount Everest, the equivalent, and one of them is just biking, down,
hanging out in the Caymans and boffing pave babes. It's just it's relatively speaking,
that's the extreme. But they're both salt of the earth, going to church every Sunday, that type of God-fearing man. But I think that's the thing. So if you think in the Civil War, talk about the greenback and then the transition as we slow down that growth, you get treasury supremacy and money, and then you repeg to a commodity in the private sector. It's all right, what do you do if you're a person today? It's because a lot of this stuff is outside of your control. I'd say number one, just keep working your butt off. and save. Because I think that the thing right now is we've been conditioned post 2008, or even before that, like going back all of this offshore dollar standard. It's like, yeah, just run up the bubble, like fund it on credit. There will come a day where, in the course of your life, where you're going to regret not having savings. So keep that in mind. So that's use that
We,
tale of the two grandpas. Like
yeah, no,
prudence is never a bad course
if you
of
want, if you want
business.
to, if you want a preview of what's coming, just go look at 2025. What happened to silver and gold? The last 18 months of silver and gold have been a perfect example of that's the preview. What comes next? Well, all the gold guys and all the silver guys are going to be right for the wrong reasons. It's because we're going to move back to gold and silver as money, but in a way
spike
that is,
from the spike from last fall and winter.
yeah. So silver from 22 to 120, or 130, and gold from 19 to 5,500. Yeah, we're just setting up for the next leg.
Why did that go
You know,
back? Why did that wave rise and then drop?
because we were destroying we were destroying the LBMA, and we were taking the Chinese and the Americans. I did a podcast with Vince Lanci the other day, for Crypto Rich, and Vince and I went over a lot of this stuff. And Vince and I have talked. That's a 3-hour podcast, Tommy. The short answer is because we were running an operation against the LBMA, the Chinese and the Americans together to take control of the physical gold and silver market. And today, what I was saying then, and what I said in many a podcast and in the newsletter and everything else, is that you have to get pricing from a U.S. perspective. And I'm going to have to go soon because we're going to shut this down. But from a U.S. perspective, first you got to get control of the pricing of your own currency, SOFR versus LIBOR. Then you move to getting control of the pricing of your collateral, gold and silver, and then you get control of the pricing of the thing that gives the flow the flow of credit value, and that's oil.
Yeah.
So that's what we're doing. And it's like, I said it last year, I'm like, well, we got control of the dollar. Now we're taking control of gold and silver. The final boss is to take control of oil. And then, after that, it'll be uranium.
So it's yeah, it's like war on multiple fronts. It's like, all right, the silver shot and petered out. It's like, but you don't have any time to pause. Like as soon as that one, you're like, I can rest my breath. It's like, no, now you got to deal with
now we
hormones.
now we got to deal with oil. Yep.
Yeah.
If you want the United States to free the world from, and it's not just the United States, it's going to buy in from the Russians, it's going to buy in from the Chinese, because it can't happen without. None of this can happen if you don't get buy-in from all three, because Europe does have a shit ton of old collateral and power within because it's the credit system, the currency system, where that's the top layer of the cake. That's where the most damage can be done to normal people, because that's where all the nominal value is, and they can use that to drive everything is like these collateral assets is at the bottom of Dexter's pyramid in terms of total value. That's a very small piece of the pie. There's a shit ton of money up here, and that money can be used to drive the nominal valuations of the stuff at the bottom of the pile. That's what they do. And so you've got to control the entire stack. Okay? Because otherwise, then the stocks and the commodities and the treasuries and everything else in the middle can't be properly valued. Okay?
So whereas at the end of the last show, you said, Tommy, you look glazed over, and I was like, no, I've been paying attention. I've actually been paying attention. I'm fucking lost. So I don't even know. So my main concern right now is like, what do I make as the title? I stuck with it for a while.
Oh, the title on this one's relatively easy. It's I don't know. I guess maybe it's harder than I thought. What's the title? The title is the end of the real war. Like the real war is actually the real war is just starting. It's for money.
I'm gonna say two competing dollars. Don't take cash.
A tale of $2.
A tale of $2.
Tale of $2.
There you go. Thank you. Thank you. I don't think I've never actually needed help with a title before, but I was like, And it's not that I was paying attention, but it's just I'm like, this is not my wheelhouse. I don't know what the fuck's going on. Trying to. I'm like, all right,
No, I don't
Dennis
know, man.
A, Charlie Duke, and I'm no, I appreciate
it's
it. Yeah.
it's not everybody's. It's very few people's wheelhouse, but it's the most important
No,
story
no,
out there today.
it's not that I'm not interested. It's me.
I know.
It's somebody who's never taken a biology class, and the first thing you're doing is sitting in on biochemistry. You're like,
Right.
I'm trying. I'm trying.
I know.
I'm like
I know.
Bismarck and West East Indies and all right, all right.
Where are we going? Yeah.
Yeah.
Where's this going? But it's important, and we'll get you there.
Yeah, no, I enjoy it. I like it. Actually, I wouldn't set up a second one if I like it. I don't know what the fuck's going on, but I do enjoy it. So,
It's your partner organization. Like I think you focus a lot on military, right?
Mhm.
This element is like
no, it's
the
equally
twin
as
brother.
important. No, it's equally as
twin
important.
brother.
Military. It's military by other means.
Yeah,
It's
no,
the same thing.
No, it's exactly the same thing.
at
It's
the
the same
end.
animal. Yeah, no,
Yeah.
absolutely.
Yeah.
That's why
It's
they did. Yeah, the BCCI and Brown Brothers Harriman. That's why they did all that
Yeah.
shit.
Why
Yeah,
is
Yeah,
George?
yeah,
or
yeah.
why is Patton's museum at Fort Knox?
precisely.
Oh, I didn't know that.
Yeah.
Really?
Yes.
Oh God, I gotta go to Fort Knox now.
Yeah.
That's it. It's in Kentucky. It's like right down the road now. I gotta go do. Okay,
There
gotta
you
go.
go.
Like
Gentlemen,
gotta go
go.
genuflect at the altar of Patton. Sounds
guys,
good.
thank you both so much for your time. We'll do another one. Guys, thank you for watching. Take care, everybody.